What do you think is happening in the blockchain industry right now?
I think in the long run, DeFi wins. DeFi wins because it's a better system. It's composable, it's transparent, it's cheaper because you're just code. You don't have all these people in this legacy infrastructure.
Hello, I'm Emma Barnett, and I'm a journalist and presenter. This is my new show, Emma Barnett Meets. First, I'll be meeting Chinese artist and dissident Ai Weiwei, and I'll talk to the novelist and political scientist Elif Shafak. Tune in to watch those who shape our world explain how the world shapes us. This is Emma Barnett Meets on Bloomberg Quicktake.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Hi, my name is Dan, and I'm here in Spain to discover the land, the food, the people, and their passion through wine, as well as how the land and the wine work together. I love land. I love wine.
There is a land where every dream tells a story about wine. The better bottle that reflects your life. Oh, I love wine. Oh, I love land. Oh, I love wine. Oh, I love land.
Destination Aragon. Aragon is a land marked by history, by the Ebro River, by the Pyrenees, and by the wine. We are in the north of Spain, almost on the border with France, in one of the greatest areas of the country. I share this land with a great friend of mine from work, the incredible John. John and I have worked together and have always understood each other well. We love talking, eating, and drinking. I think Aragon is going to be the perfect destination to share. Aragon has 4 main winemaking areas, each with its own character.
So John, this is exciting to be coming up to our first vineyard.
Oh, I can't wait.
And the DO is called?
Borja.
Borja. I think Borja. I think that's right.
We are in Borja.
The first place we're going to is a vineyard called Alto Moncayo. And I think Moncayo is one of these hills or mountains around here.
Okay.
And Alto means top or tall, so a tall Moncayo, right?
Okay.
Actually, that's a good analogy because here's something I'm going to tell you. But 2 of their wines got 100 points from Robert Parker.
At a place that made 2 100-point wines?
Yeah.
100-point wines are mythical. They're like unicorns.
You don't hear
They
them.
don't exist.
No.
Is spread betting right for me? Get more flexibility. Benefit from tax-free.
Historic drop. Sterling hits a Thatcher-era low on Liz Truss's first day in office. She lays out her plan to tackle soaring gas and power prices today. Good morning, everybody. Just under an hour away from the start of cash equities trading here in Europe for this Thursday morning. Let us look at the futures picture. And we have to bear in mind what happened yesterday and what happened in the US also, as well as what happened in Europe. Yesterday, we were fairly flat across European markets, apart from in London, where we saw a substantial drop. And that was all connected to commodity prices. We saw WTI down by around 6% in yesterday's session. So the UK was under pressure as a result. Energy and mining stocks falling. The US was a little bit, was a whole lot stronger, in fact. And so we look to play a little bit of catch up with the US story, with those futures for Europe pointing higher. And this is the US picture, which looks a little bit more muted. So some more modest gains expected over in the United States. If we have a look at the GMM, you'll see some of the themes of yesterday being unwound a little bit. We see some movement higher in energy prices, but we should bear in mind, of course, that big move that we saw in oil yesterday. So WTI moving by, as I said, nearly 6%. And then we see a bounce from that today. We see iron ore moving higher. We see aluminium moving to the upside. So a host of commodities, a host of metals and other products bouncing a little from the extensive losses that we saw yesterday. Through the Asian session, then, one theme dominated, and that was all things Australian, really. We see Australian stocks moving higher, the Australian dollar moving lower, Australian yields, as you can see, moving lower as well. And all this connected with what we heard from the RBA's Governor Lowe. And this could have a broader global read across in some cases. He was signalling that perhaps we're near the end of the jumbo interest rate hike phase. Well, not so if you're the ECB, just about to start it, it would appear. But we are looking for the ECB to decide whether 50 or 75 basis points in hikes today. And that is, of course, one of our big stories. We'll get more details on that shortly. Let us, for the meantime, though, get a Bloomberg First Word News update. Top stories we're covering this morning. Here's Laura Wright. Good morning, Laura.
Good morning, Anna. US National Security Advisor Jake Sullivan is warning that a Chinese invasion of Taiwan remains a distinct threat. He's insisting the White House's position over the island's status has not changed, despite Chinese claims to the contrary. He spoke to Bloomberg for the David Rubenstein Show peer-to-peer conversations.
I think it remains a distinct threat that there could be a military contingency around Taiwan, and the People's Republic of China has actually stated as official policy that it is not taking the invasion of Taiwan off the table.
In the UK, new Prime Minister Liz Truss will today set out her plan to tackle soaring energy bills. It will be her first significant act as leader. Truss has been trying to evoke memories of her Tory predecessor, Margaret Thatcher. The UK hit another unwelcome comparison to the Thatcher era yesterday, with the pound falling to the lowest against the dollar since 1985. In the US, President Joe Biden is holding back on a decision to scrap Trump-era tariffs on China's imports. We're told that's as the administration studies ways to help businesses seeking relief. Any decision before the US midterm elections in November poses domestic and international risks for Biden and his fellow Democrats. The Federal Reserve's battle to bring inflation under control will likely cause more harm to the US and world economy than anticipated. That's according to a pair of papers set for presentation at a Brookings Institution conference this week. One says the Fed will have to push unemployment higher to hit its inflation target. The other warns of the dangers of developing nations from rising US rates and a strong dollar. China has extended the lockdown of its megacity Chengdu, home to 21 million people. It's the biggest city to shut since Shanghai earlier this year. The decision to prolong the week-long lockdown shows Beijing remains committed to COVID-0, even as it becomes more costly for the economy. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Well, thanks very much, Laura Wright, here in London. Now, the ECB will hold its first monetary policy meeting since July, when officials raised the key rate for the first time since 2011. The central bank is on the brink of a jumbo 75 basis points hike in interest rates to wrestle back control over record inflation, even as the risk of a Eurozone recession, of course, is rising. Let us get an update from our colleague Maria Tadeo, who's on the ground for us in Frankfurt, Bloomberg's European correspondent Maria Tadeo. Maria, very nice to see you this morning. So the ECB is on track for another rate hike. I suppose the question is it 50? Is it 75? What are you hearing?
Yes, Anna, because we know the only way is up for the European Central Bank. They have to hike rates. This is a single mandate central bank. It's about price stability, close but below 2%. When you look at the picture around the euro area, in some countries, inflation now more than triples that goal. So they have to hike. That is clear, but you alluded to it. The only question going into this governing council meeting is, will it be 75 or is it now actually 50? Now, when you look at the 75 basis points camp, what they argue is there is a window now to hike and you should do it quickly, decisively, and take swift action. This is now about the credibility of the institution. On the flip side, when you look at the 50 basis points camp here, what they argue is that you could find yourself in a situation where you're hiking aggressively at the same time your economy about to enter potentially a recession and facing an energy crisis. So which way this is going to fall, I guess we'll find out in a few hours from now.
Yeah, absolutely, Maria. And one of the things they are balancing, of course, is the threats to the downside for the European economy. And one of those is very much driven, or that is very much driven by the energy crisis. We know policymakers are busy trying to work out what to do on that front. That's quite an unknown for the European Central Bank to have to factor in.
Yeah, it is a wild card, and Anna, it's on everyone's minds, whether it's here in Frankfurt at the central bank or back in Brussels, the European Commission. This is on everyone's minds on the European policymakers scene. Now, this is a story, and the fact that to me is quite telling already that today we're here at the ECB, but tomorrow we'll be in Brussels following that energy ministers meeting, is that the geopolitics, the energy, the economic side of this, ramifications of it have now become essentially a single story. And I would point to the words of the head of the Commission yesterday, Ursula von der Leyen, who was very defiant on this, saying we're not going to fold in the face of Russia's blackmail. The goal now is to cut revenues from energy when it comes to Russia, but also stabilize prices in the market. There's a number of measures that have been floated. She doubled down on the cap on Russian gas. She talked about limiting profits for companies that produce energy but are not necessarily pegged to gas. She also talked now about demand destruction. This is key, making that mandatory, and of course providing liquidity for companies. So this is a full menu of measures. Whether they work or not, the implementation, I guess, we'll have to wait and see.
Okay, yeah, we heard a lot from the European side, and we'll wait to see what the individual nations make of it all come Friday. Maria, thank you very much for that. Bloomberg's Maria Tadeo with the latest on the ECB and the way that intersects, of course, with the energy crisis. Of course, we'll have comprehensive coverage of the ECB's rate decision. Christine Lagarde's news conference will follow that, of course. All of that today, 1:15 p.m. UK time. Stay with us for that. Joining us now here on set in London, Pooja Kumra, Toronto Dominion Bank Senior European Rates Strategist. Pooja, nice to have you with us. Thanks for joining us. So this question, let's start with the sort of basics, I suppose, the question of 50 or 75. We heard a lot from the hawks around Jackson Hole in Europe, just as we heard in the United States. But there's always the commentary of Philip Lane ringing quite loudly, perhaps, in people's ears. So are you 50 or 75?
So I would say it's more of a coin toss right now. I think across all markets, whether you look at US, UK and ECB, I think the key thing is that ECB will be facing markets before the other do. I think with respect to how markets take I think 50 or 75 basically mean the same right now for markets, because either ECB will need to do like consecutive 50s or they just do at once at 75.
So the terminal rate and where they're heading is more important.
Exactly. And I think with respect to the terminal rate, markets as well as ECB members have been more or less on board with a 1 to 2% terminal rate. And I think that's why I feel that even if they do a 75 or a 50 today, market reaction should be limited, just given the fact that we saw a pretty strong sell-off post Jackson Hole. And I think the key would be how Lagarde actually focuses on the outlook that she presents. So she will have further upgrades to inflation, with inflation almost reaching 10% by the end of the year. But she will also have to downgrade growth forecasts. We were not predicting recession in the June forecast, and that is going to be predicted today. And I think that's where it's going to be a fine balance for her.
Yes, and how much do they need to acknowledge the risks for the Eurozone economy? Because clearly this will be very much on their minds. But as we saw with Jackson Hole, simple messaging from the Fed around, you know, the seeming monofocus, laser focus, even though everybody knows, of course, they pay attention to all of the data. But they had to give that message just to sort of drill it home for the markets that they are going to do what it takes on inflation. Does the ECB need to approach things in the same way, or because everybody knows that the threats to the Eurozone economy are out there, do they need to acknowledge something different?
Unfortunately, they will still need to sound a bit hawkish, just given the fact that we are seeing no moderation in month-to-month inflation. And I think that's the part of it that ECB will have to think about, because even if you have inflation at 10% in Germany, Estonia, Lithuania have it at 20%. So I think that is something that must be giving sleepless nights to ECB. And they really know that they have a very short hiking cycle. So they need to act quick, fast. They have to acknowledge all scenarios, and that's what even BOE has done. I think the key thing is how natural gas ends up. There's a scenario that it ends up at 200, but there is also a scenario that we are working on which would mean 350, and that means inflation could just keep going higher.
Yeah, we dropped down actually today. I was just noticing we dropped down underneath that 200 euros per megawatt hour mark on the European benchmark. So we're down another 8% this morning at 196. But yes, to your point, who knows what happens during the winter, how cold it gets, how much flow comes from Russia and elsewhere, and therefore where these prices trade. So it's interesting that you say the markets shouldn't really mind too much or move, see it as quite different if it's 50 or 75. Is that true, Pooja? Because, 75, there is precedent now for 75, meaning we are taking inflation incredibly seriously, we're laser focused on it, and we're doing everything we can to tackle it. 50 maybe doesn't feel like that.
I think, yes, I think right now markets are just used to big numbers. We did see 100 basis points from BOC. I think 75 gives the message they are on it, but it also gives the message that they are closer to their terminal rate. And I think that's where markets could take comfort, that ECB is on its work, it's doing big steps close to terminal rate, and I think that's where we could see a rally in bonds. And to be honest, right now I feel the move for bonds is lower as compared to higher, given so much hawkishness is priced in the front end.
Yeah, and will we hear anything about spreads? Will we hear much about? Going into the last meeting, it was all about spreads. It was all about this tool to manage spreads as interest rates rise. Is that going to be a focus, or is the sort of secondary narrative going to be about the euro this time?
No, I think that's a very great point of what you talked about the spreads. Is just because they had all the tools set up in the last meeting, whether it was TPI and PEP, they actually have a hedge to actually hike by 75 basis points, because they can say that we are addressing fragmentation. So I feel that will continue to be in the speech, given the fact that markets really worry about the BTP versus Bund spreads, especially going into the Italian election. I think when it comes to euro, unfortunately, it's not in their hands. No matter what they do, same story for the yen. So I think they have given up on that story, whether it's currency or oil is something that's just not in their control.
Okay, Pooja, thank you very much. Thanks for your thoughts. Really good to get your perspective. Pooja Kumra, Toronto Dominion Bank Senior European Rates Strategist. Coming up on this programme, the pound sinks to the lowest level against the dollar since 1985 on Liz Truss's first full day as Prime Minister. She sets out her plans to tackle the energy crisis later today. We will have the details. If you have any questions that you want us to put to our guests, then please do send them through IB Plus TV Go. That is the function to use on your Bloomberg. This is Bloomberg.
What do you think is the future of the US dollar?
For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
Welcome back to Bloomberg Markets Europe. 7:15 here in London this Thursday morning, and we see European equity market futures point higher, looking to catch up with some of the positivity we saw yesterday on Wall Street. The FTSE 100 underperformed yesterday as a result of energy prices. Looks as if it might continue to do so today. Let's talk about London, but from a broader context. Lloyd's of London, in fact, announcing a first half underwriting profit of £1.2 billion. That's despite a challenging year of natural catastrophes, war in Ukraine, and new peaks for inflation. The surge in prices has prompted the global insurance giant to pay staff earning less than £75,000 some extra money. That's as the UK inflation rate, of course, reaches astronomical levels. Let's have this conversation now then with Bruce Carnegie-Brown, who joins us here on set, the Lloyd's of London chairman. Bruce, really nice to have you with us. Let me start with the numbers that you've reported. Improving underwriting results, but an overall loss due to the higher interest rates causing mark-to-market losses. So give us a sense of what turns those short-term mark-to-market losses into something much more positive in the longer term.
Well, clearly, when you revalue your portfolio on the basis of higher interest rates, the capital value of the portfolio goes down, and so we report that mark-to-market loss. It is an unrealized loss, and of course it will unwind over time as the bonds, which is the principal part of our portfolio, repay at par. And of course we will then benefit from higher interest rates on the portfolio over time. So we expect that negative impact to unwind over the next 2 years.
Okay, so that's the sort of profit story and how that develops. In terms of your cost base, you know, clearly inflation is a global theme. Inflation is something that your business and your staff are having to deal with. What is that doing to your cost base then, having to think about remunerating staff more, being asked to perhaps?
Well, it's clearly a demand for talent, and on top of that there are inflationary pressures in terms of costs, so we are trying to respond to that. The biggest impact is really the inflationary impact on our claims, and that's the issue that we're managing most actively in reserving and pricing for our product.
Yeah, so how is inflation impacting both the premiums that can be charged and also the claims that you have to pay out, you know, the rising cost of the stuff you're having to replace?
Well, so the issue really is, of course, you charge a premium today, but the claims come in over a period of time, and so inflation is the difference in terms of that challenge. When inflation's low, you don't have to factor that in. We do have to factor that in, but it is on a lagging basis, and so insurance is more susceptible on inflation than other lines of business. But we are factoring that into the way that we price for our products, and I'm confident that we're on top of the issue at the moment.
So there are self-help things you can do?
Yes.
Yeah. Let me ask you about Ukraine, another, of course, big talking point within the insurance sector. Last time we spoke, you said you're still reviewing various insurers' exposure to war in Ukraine. Do you think that we've got a full handle on what is sanctioned and what is not? Because there was this sort of chilling effect around various lines of business where people were not sure whether they should be doing business, and in your case, you know, offering insurance around Russian activity. Do we have a better sense of where that leaves us now?
So I think on sanctions itself, we've been very focused on making sure the market complies with those. They are complex, as you indicate, and the key issue is making sure that we're coordinated between different sovereign nations, because insurance is of course cross-border. All of that is happening. I think there are other issues associated with sanctions in terms of their impact on trade. So there's a challenge around over-compliance with sanctions because of their complexity, which may have an adverse impact on trade and therefore fuel increases in pricing. As you know, we've opened up this corridor for grain to be exported from Ukraine through the Black Sea, and we're really proud to have played a part in allowing those grain shipments to happen by providing the necessary insurance behind that.
Yes, so are all the grain ships that ask for it, they are all able to be insured these days? This
well,
is all fixed in that sense.
all is a big word,
Yeah.
so we look at it on a case-by-case basis, but a number of ships have now moved through the Black Sea out of Odessa with the support of Lloyd's insurance programs.
Can I ask you about cyber attacks? We had a story recently that you have asked your market to stop selling insurance for state-backed cyber attacks from 2023. Why have you decided to do it? And do you think the rest of the market will follow suit? Will this become something that you cannot insure against?
So we're actually not stopping the insurance of it. We're asking for it to be more clearly explained as to when it's covered and when it's not. And so the best way to do that is to cut it out of traditional cyber insurance policies and then for people to buy an additional war-related policy if they want to. In fact, we do that all the time in the regular insurance market. And this is really about being clear on aggregated exposures across insurance companies' books in order to be clear on where those exposures lie. So we would actually expect to be selling different policies to cover the war risk that has been excluded from standard policies. And I imagine other insurance companies will follow our lead.
Yeah, thinking about war risks, I mean, are there others that your members will be paying attention to, the risks of them? Of course, we've seen war in Ukraine realise and actually take place, but what about risks of invasion of Taiwan or other geopolitical challenges? Are these things that members are thinking about and maybe even thinking about how they would price for?
Well, war risks are typically excluded from all risks policies, and all we're trying to do is to say, let's make sure we're doing the same thing in cyber and being clear on what's covered and what's not, because clarity between insurer and customer is the key issue. You want to know that you're covered for the things that you're paying for, and of course insurers want to price for the risks that they cover. So this is really much more about clarifying what is in a policy and what is not, rather than excluding all coverage for these kinds of things. So they'll be bought in different ways.
Thinking about the UK, we have a new government, of course, just in the last couple of days, so very topical. The new UK Chancellor talking about a big bang too for the City of London, casting our minds back to the 1980s. I mean, it's not new in the sense that Rishi Sunak, when he was Chancellor, was talking about something similar, and we've seen a lot of the Financial Markets Bill, what that contains. Are you expecting something that substantial, a big bang too?
Well, the trailer has been for more radical action by the government around deregulation than was on the agenda of the previous government. So the city needs to respond to that. We need to be clear about where deregulation would be helpful and where it won't be helpful to what we need to do. And of course, trying to do things that cause the minimum amount of stress but the maximum amount of return in terms of where we apply our efforts. Because a lot of this issue is quite urgent.
Yeah, I mean, is this all about Solvency II? Does it go broader than that? Do you have expectations that this new government will be more radical, perhaps, on that agenda than the last one?
That's what they're telling us, and so we need now to understand exactly what's behind those commitments. A good example, I think it is beyond Solvency II, but a good example would be the competitiveness agenda. The last government raised it as a secondary objective for regulators. I wonder whether this government might try to promote it as a primary objective for regulators, for instance.
OK, Bruce, thanks so much for your time. Really good to see you. Bruce Carnegie-Brown, Chairman of Lloyd's of London, the insurance market. We thank Bruce for his time. More on the markets shortly. This is Bloomberg.
Wall Street prepares for the latest read on inflation.
Things are moving. The news flow is extraordinary.
Will headline inflation continue to ease?
The totality of the data has been better than expected.
Very positive movement on inflation.
Instant reaction on Bloomberg surveillance.
This is a new era, and it is one of the most pressing concerns facing us.
And what it means for the Fed.
This inflation fever is breaking.
The world can be a noisy place.
Stock prices are set to soar.
But what if under all the noise was opportunity? Join more than 3 million users in over 100 countries and be empowered with Capital.com.
And economies keep softening.
They are on track, perhaps, for that soft landing.
Inflation in Focus, Tuesday on Bloomberg.
much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Welcome back to Bloomberg Markets Europe. We still have 35 minutes to go until the start of cash equities trading, and futures are pointing higher, a little bit higher in the case of the FTSE 100, really underperforming yesterday as a result of weaker energy prices, weaker oil prices. We now have an 88 handle on Brent, so under $90 a barrel once again. So the rest of the European markets could go a little bit higher. Let's check the GMM for you, and you can see that the energy story is rebounding a little bit from the losses of yesterday. So we see some movement higher in iron ore and aluminium, some movement lower, which is reassuring, on natural gas. We actually dropped below that 200 euros per megawatt hour level just a little bit earlier. Australian assets really in focus as a result of the RBA's comments about the end of jumbo hikes. Coming up, it's all about energy. Prime Minister Truss is set to announce her government's plan to deal with the UK's crisis as the price of power has been surging, of course. We'll get details next. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images we can live the violent emotions of hell, the weight of purgatory and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside, so it's about using technology, pixels, and binary code with a human and humanizing content.
What do is the future of the US dollar?
For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
Ever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to Bloomberg Markets Europe. Half an hour to go until the start of cash equities trading. Here are your top stories. Showtime. The ECB is on the brink of a jumbo 75 basis point hike, even as recession risks rise. EU leaders ready emergency energy measures. As long as it takes, Lael Brainard joins a chorus of Fed speakers vowing to do whatever is needed to beat inflation. Plus, historic drop. Sterling hits a Thatcher-era low. On Liz Truss's first full day in office, she lays out her plan to tackle soaring gas and power prices today. Welcome back to the programme, everybody. Half an hour then until the start of the European trading day. And the futures picture looks brighter than yesterday, certainly in the case of the FTSE 100. We were down nearly 1% on the FTSE, 0.9% on the FTSE 100. But we look to bounce a little bit with a small rebound in commodity prices that we're seeing this morning. And it was that sell-off in commodities that led us lower yesterday, in part driven by concerns about global growth and China. DAX futures and CAC futures look a little bit brighter. Let's focus on the European Central Bank once again. The ECB holds its first monetary policy meeting since July. That will take place in Frankfurt today. Back in July, that was when officials raised the key rate for the first time since 2011. The central bank is then on the brink of a jumbo 75 basis points hike this time in interest rates to wrestle back control over record inflation, even as the risk of a Eurozone recession rises. For more, let's bring in our Bloomberg European correspondent, Maria Tadeo, who's in Frankfurt for us. Maria, the ECB then is on track for another rate hike here. The question is how aggressive they will be in the short and then the long term.
Yes, and Anna, what a tough job for Christine Lagarde now here at the central bank. What we know is that, of course, the ECB has to hike rates. There is no question. This is a single mandate central bank, close but below 2%. When you look at the real life picture, inflation in some countries across the euro area now more than triples that goal. They have to hike. But you alluded to the tension going into this meeting, and that is just how much. When you look at the 75 basis points camp, what they argue, of course, is that there is now a window to hike, and therefore decisions now should be swift and they should be decisive. This is about the credibility of the institution now to show that it can get a hold of inflation. The 50 basis points camp on the flip side, though, they argue, well, we have to hike rates, but at the same time, there's no denying that this economy risks a recession and it's facing now a full-blown energy crisis. Which way this is going to fall, we'll have to wait until 2:15 Frankfurt time for that decision to come through. And Anna, just if I may very briefly, today we're here in Frankfurt at the ECB, but tomorrow we'll be in Brussels with energy ministers meeting. And it does tell you just the choreography of this, how the geopolitics, the economy, and the energy now for Europe have essentially become a single story.
Yep, absolutely, Maria. Thank you very much. It'll be really fascinating to see the messaging from the ECB today, the balance of the messages around fighting inflation and weaker growth. Thanks to Maria Tadeo for joining us with a look ahead to the ECB meeting. And of course, we will have comprehensive coverage of the ECB's rate decision and Christine Lagarde's news conference that follows 1:15 p.m. UK time. That's the time to tune in for that. Let us get a Bloomberg Business Flash. Laura Wright has the latest corporate news flow for us. Laura.
Thanks, Anna. Apple has unveiled a new lineup of devices without raising its US prices in one of the worst years for inflation in decades. This includes the iPhone 14, fresh AirPods Pro earbuds, and an Apple Watch upgrade that includes a first ever Ultra model. Apple is betting the new features, along with the lack of a big price hike, will be enough to ward off competition from rivals. Mixed results for Elon Musk in his fight to cancel his buyout of Twitter. A judge is allowing him to add the claims of the recent whistleblower to his case, but is not letting him push back the October trial date to give him more time. The judge is also slamming Musk for not properly turning over text messages that could be evidence in the suit. Reality TV star and entrepreneur Kim Kardashian has a new business venture. She and a former partner at Carlyle Group, Jay Sammons, are launching a private equity firm. It will focus on consumer and media businesses. The apparel business Kardashian started in 2019, Skims, has been valued at $3.2 billion. That's the Bloomberg Business Flash. Anna.
Thank you very much, Laura Wright, here in London. Now, the UK's new Prime Minister, Liz Truss, will set out her plan to tackle soaring energy bills later this morning. Meanwhile, the Bank of England Governor Andrew Bailey says recession for the UK remains the most likely outcome.
The recession, going back to I hope it doesn't happen, but obviously we have forecasted because we think it is sadly the most likely outcome. Of course, is overwhelmingly caused by the actions of Russia and the impact on energy prices.
Let's get analysis on the UK then. Bloomberg's Lizzie Burden joins us here on set. Lizzie, good morning to you. A lot of the detail, a lot of the overall policy has been leaked. We know kind of what to expect. So what are we watching for today?
Well, three main things. First of all, the price tag. Documents seen by Bloomberg suggest this is going to cost £200 billion, but lots of different figures floating around. Even then, it would suggest that consumers would still face energy bills almost triple where they were last year. But secondly, how much will this be targeted? Will it be fiscally wasteful, or are people going to be getting money that they don't need? And finally, how is it going to be paid for? We heard Liz Truss at her first Prime Minister's questions yesterday seeming to rule out a windfall tax, but then seeming to row back on that later in the day. And secondly, how much borrowing will it take? We had Andrew Bailey, the Governor of the Bank of England, at the Treasury Select Committee yesterday, saying that perhaps the BOE is going to have to put the brakes on active quantitative tightening because it's going to take so much borrowing.
Yeah, I mean, we already have a partial windfall tax, don't we, of some of the oil and gas sector here in the UK, don't we? Lizzie, here's a question that the gilt markets have been reacting to already, and that is whether this kind of policy initiative is going to curb inflation. And I guess we have to detangle the sort of short-term mechanistic effects versus the medium term.
Exactly. So our economists say that this is going to mean inflation's already peaked, that a recession can be avoided, although you heard Andrew Bailey there disagreeing with that analysis. And that would all mean that 75 basis points from the BOE at its September meeting is less likely. But Hugh Pill, the chief economist of the Bank of England at the Treasury Select Committee, made that distinction that you just made between the short-term and the long-term impact on inflation. Our economists agree that because of the risks of the economy overheating because of this support, you may have to see rates higher for longer.
OK. And are we already seeing a shift from sort of campaign economics, which of course we've been listening to for the last 6 weeks or so, all the way through the summer, to sort of government economics? Is there a different flavour to what we're hearing now from Liz Truss as Prime Minister versus candidate?
Well, you hinted at the change of heart on the windfall tax. Perhaps Liz Truss will continue the windfall tax that was put in place by Rishi Sunak under Boris Johnson. Of course, £200 billion worth of support also seems a lot like a handout, which throughout the campaign Liz Truss said she was against. But at the same time, the new Chancellor Kwasi Kwarteng seems to be on the charm offensive with the Bank of England after all that tough talk from Liz Truss about the BOE, blaming it for inflation throughout the campaign. Now he's going to be meeting the governor twice weekly at first, then weekly. And he said that the BOE's independence is sacrosanct. So it does seem to be a softening of the language, at least, on the BOE to appease markets.
Yeah, we will watch that transition carefully then. Lizzie, thanks very much. Bloomberg's Lizzie Burden with the latest on the UK. Now, one person familiar with Liz Truss from her time as Foreign Secretary is the US National Security Advisor, Jake Sullivan. Here's what he had to say on the new Prime Minister and her likely impact on the so-called special relationship between the United States and the United Kingdom.
I have met her before. I've met her here in the White House, right down the hall from where we are right now, when she was Foreign Secretary. She's transitioned from being essentially their Secretary of State to being their Prime Minister. And actually, just yesterday, President Biden had the opportunity to have a long phone call with her just hours after she had assumed her new position.
And do you expect any change in the UK-US policy as a result of her becoming Prime Minister?
At a foundational level, no. This is a special relationship. The two of them reaffirmed their commitment to the strength and vitality of the US-UK alliance. And I think on all of the major issues, whether it's Russia, or China or Iran, you'll see the same kind of deep consultation and engagement between the two countries that you've seen before, regardless of who's president, regardless of who's prime minister. So I don't expect that there will be any fundamental changes in the relationship, but there'll be issues that we have to work through, of course, as there always are.
So worry not, it's still special. National Security Advisor Jake Sullivan there, expecting more of the same from the UK and its new Prime Minister. We'll focus on energy shortly. Coming up on the programme, all eyes turn to Ukraine's gas link, which looks more vulnerable as Russia continues to squeeze Europe through the Nord Stream pipeline. What will happen to the other pipelines? We'll talk about that and all of those big moves in commodities. That's next. This is Bloomberg.
What do you think is happening in the blockchain industry right now?
I think in the long run, DeFi wins. DeFi wins because it's a better system. It's composable, it's transparent, it's cheaper because you're just code. You don't have all these people in this legacy infrastructure.
Cryptocurrencies have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. I would characterize this as crypto learners. We have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to Bloomberg Markets Europe. 18 minutes until the start of cash equities trading for this Thursday morning, and European futures point a little higher, especially in the case of the CAC 40, up by 0.7% or so this morning. US futures also positive, but slightly more muted. Now, at its biggest product launch of the year, Apple unveiled a new lineup of devices with one major surprise. It didn't raise its US prices during one of the worst years for inflation in decades. Bloomberg's Emily Chang in San Francisco sent these details.
Coming to you from Apple headquarters in Cupertino, Apple unveiling a slew of new products, including new iPhones, watches, and AirPods. Perhaps the biggest surprise isn't the new technology, but how much it costs. Despite record inflation, Apple isn't raising the prices on its new phones. So you can buy a new iPhone 14 for the same price you could buy an iPhone 13 last year. Of course, there are technological upgrades, especially when it comes to the Pro. Thinner, faster, longer battery life, better camera technology, also satellite capabilities for all the new iPhone 14s, meaning you can send an emergency SOS from wherever you are in the world, even if you don't have service. They also unveiled a new Apple Watch Ultra, a smartwatch geared toward outdoor enthusiasts. They call it your own personal dive computer, if you will, also undercutting Garmin, the nearest competitor on price, by a few $100s if you're looking at the higher end. And when it comes to AirPods, we got the first upgrade there in 2 years. Of course, the big question is, will consumers buy? any of these new products when they're already under pressure, facing higher prices, everything when it comes to gas and groceries. So all eyes will be on just how big this new Apple upgrade cycle will be. Emily Chang, Bloomberg, Cupertino.
Emily Chang there on Apple. Let us get a Bloomberg First Word News update. Top stories we're covering this morning. Here's Laura.
Thanks, Anna. In the UK, new Prime Minister Liz Truss will today set out her plan to tackle soaring energy bills. It will be her first significant act as leader. Truss has been trying to evoke memories of her Tory predecessor, Margaret Thatcher. The UK hit another unwelcome comparison to the Thatcher era yesterday, with the pound falling to the lowest level against the dollar since 1985. In the US, President Joe Biden is holding back on a decision to scrap Trump-era tariffs on China's imports. We're told that's as the administration studies ways to help businesses seeking relief. Any decision before the US midterm elections in November poses domestic and international risks for Biden and his fellow Democrats. US National Security Advisor Jake Sullivan is warning that a Chinese invasion of Taiwan remains a distinct threat. He's insisting the White House's position over the island's status has not changed, despite Chinese claims to the contrary. He spoke to Bloomberg for the David Rubenstein Show peer-to-peer conversations.
I think it remains a distinct threat that there could be a military contingency around Taiwan, and the People's Republic of China has actually stated as official policy that it is not taking the invasion of Taiwan off the table.
The Federal Reserve's battle to bring inflation under control will likely cause more harm to the US and world economy than anticipated. That's according to a pair of papers set for presentation at a Brookings Institution conference this week. One says the Fed will have to push unemployment higher to hit its inflation target. The other warns of the dangers of developing nations from rising US rates and a strong dollar. China has extended the lockdown of its megacity Chengdu, home to 21 million people, its biggest city to shut since Shanghai earlier this year. The decision to prolong the week-long lockdown shows Beijing remains committed to COVID-0, even as it becomes more costly for the economy. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura writes here in London with your First Word News update. Let's turn our attention back to the markets and to commodities specifically. Russia's move to shut down Nord Stream left just one major pipeline bringing natural gas straight to Europe. But as the conflict drags on and tensions continue, the gas link looks increasingly vulnerable. Meanwhile, elsewhere in commodity markets, crude oil prices have eased to around $88 a barrel. Its lowest, that was the lowest level since early February, raising optimism of lower import costs and softer consumer prices. Joining us now, Bloomberg's energy reporter Stephen Stapczynski. Stephen, let's start with the gas story then. What are we watching for specifically around gas transit from Russia to Europe now when it comes to that Ukraine pipeline, when it comes to the other destinations? Because not all of it went through Nord Stream, of course, and that's where a lot of our focus has been.
Correct. It's really the last, upside risk that Russia has total control over. They could cut supply via this link through Ukraine. Now, I think one of the key aspects to look at is what are policymakers in the European Union going to do on Friday when they discuss ways to curb power prices and fuel prices for consumers in the bloc. One of the things that they're looking at is a potential price cap on imports of Russian gas. That means that supply coming through Ukraine would have some sort of price cap to continue the flow, but stop the money going to Moscow. Now, Putin said yesterday that any kind of price cap would result in a total halt of energy exports. He thinks it's foolish. And that kind of sets us where we are. If Europe does agree to some sort of price cap, that would probably push Putin's hand to halt that supply.
Right, and yet we didn't see an enormous amount of, we didn't see upside response in gas prices. We saw, when that line dropped, I remember watching the oil price tick up a little bit. We saw a bit of a spike there. That was unwound for other reasons later. But sticking with the gas story, we didn't see much response in gas. Why do markets not focus so much on what Putin said yesterday?
I think because people are focused on what the European Union is saying. They're going to have some sort of market intervention. Who wants to be long if there are going to be some sort of price caps, or if they're going to shut down markets? They've even talked about shutting down the futures market for electricity. So I think that's why you're seeing such a pare back recently. At the same time, demand isn't exactly strong right now. We're in the so-called shoulder month. Demand is really going to pick up for winter. So people are waiting to figure out, okay, are we going to have a cold winter? And if we do, how bad will it be? And then you're likely going to see a higher jump in energy prices at that point.
Okay, and thinking about oil prices, we saw a jump in oil prices yesterday. We've still got an 88 handle on the Brent price, Stephen. We're back down to more recognizable levels since the invasion of Ukraine, where we were sort of stratospheric for a period. A lot of this has to do with concerns around China. What's the thinking about where oil heads?
Yeah, I mean, absolutely, China is the name of the game for the oil market. You're seeing Chengdu, a major city in China, having lockdowns. There are fears that this COVID zero policy will continue to sap demand from the biggest oil importing country in the world. So that is going to kind of weigh on where we are. At the same time, the hawk is fetish, and the hawk is the Fed is hawkish rather. And because of that, you are really seeing this outlook that you could see a recession later this year. If there is higher interest rates, that will clamp down on consumption of oil and potentially lead to a bigger gap of supply. And because of that, a lot of folks are betting that you're going to see oil prices fall later in this year. OPEC Plus doesn't believe that. They think that the market is tighter than where we are. But when you look at the futures market, you can't deny the fact that traders are in a more bearish position than they were a few months ago.
Stephen, thank you very much. Thanks for the update. Bloomberg's energy reporter Stephen Stachynski with us to talk commodities. Coming up on the programme, we'll get back to the stocks in focus. Your stocks to watch, including the semiconductor makers. TSMC's surging chip sales may be the tide that lifts all chip stocks. We will get some analysis next. This is Bloomberg.
What do you think is the future of the U.S. dollar?
For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Ferro. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to Bloomberg Markets Europe. We have around 7 minutes until the start of cash equities trading. The futures picture looks a little bit brighter, but let us get some stock specifics. Danny Berger joins us with our stocks to watch. And Danny, let's talk about Darktrace because there hasn't been much M&A activity this year. There's been some to talk about, though, in the shape of Darktrace, but not any longer.
Yeah, and perhaps not surprising there's not been much M&A given the turbulence. Well, more turbulence for Darktrace, of course, the cybersecurity firm. There had been noise around Thoma Bravo, the American private equity fund, buying them, taking them private. Well, Thoma Bravo releasing a statement this morning, a filing, saying that early discussions had taken place, but an agreement cannot be reached on the terms of a firm offer. So backing off of Darktrace, they did give themselves the optionality in a separate statement to reassess in 6 months' time if things change. So there is still a possibility here, but as of now, Anna, it seems that Thoma Bravo will not be buying Darktrace.
Okay, so no deal there. Let's talk about AB Foods. We've got some guidance from them around their business. And of course, despite the name, they're not all about food.
They're mostly not about food, we should say. AB Foods, of course, the owner of Primark, warning on their outlook given a strong dollar and also given rising costs, given energy. It really is a confluence of all the macro headwinds that this world is currently facing. So energy costs, I mean, that spans the entirety of their business. And on the other side, they buy most of their clothing stock in US dollars. They, of course, mostly sell here in the UK. So that really hurts them, that FX differential. They also said that their ability to rise prices next year will be capped just because consumers are taking a hit. Of course, they're more of a discount store, so it's important there that they are able to retain that group of buyers.
Now, I remember a year or so ago, it was all about whether chip makers were going to be able to ramp up capacity to keep up with our insatiable demand for gadgetry during lockdowns. Where have we got to on this? TSMC out with numbers.
Yeah, their numbers, seeing a 59% climb in August sales from a year ago. I mean, it is just a reminder that not all chip makers are created equal. Depends what market they're in, what consumer they're in. I mean, we heard Samsung warning about chips not that long ago, but TSMC is shining bright, so we could see a lift to some of the European chip makers as well. Infineon already up on Tradegate pre-market.
Yeah, and indeed, and our colleagues talking about watching semiconductor gear makers as well. So some of those companies that supply the likes of TSMC. Danny, thank you very much for the briefing. Danny Berger with your stocks to watch. Back to the overall market themes, and futures are pointing higher. US futures also point higher, interestingly, because to some extent we're just playing catch up with the US here in the European session this morning. They had a stronger close than us yesterday, and so we're sort of making up that lost ground. But the US market points a little higher, not by much though, up 0.1% or so on E-minis and Dow futures. Nasdaq futures up 0.3%. Australian assets feature quite highly on the GMM today because, of course, there's some comments through from the RBA about the end coming for jumbo rate hikes. Well, maybe not in the case of the ECB. Of course, a lot of our attention will focus there. We'll get the latest from the ECB and their policy decision later today. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What do you think is happening in the blockchain industry right now?
I think in the long run, DeFi wins. DeFi wins because it's a better system. It's composable, it's transparent, it's cheaper because you're just code. You don't have all these people in this legacy infrastructure.
Welcome to the European market. Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London, and here are your top headlines. Showtime. The ECB is on the brink of a jumbo 75 basis point hike, even as recession risks rise, while EU leaders ready emergency energy measures. As long as it takes, Lil Brainard says, or joins the chorus of Fed speakers vowing to do whatever is needed to beat inflation. Plus, historic drop. Sterling hits a Thatcher-era low on Liz Truss's first day in office while she lays out her plan to tackle soaring gas and power prices today. So let's take a look at the futures. Again, it's a big day, and I would say it's a big day for Euro. It is also a very big day for overall what some of the treasuries could be positioned ahead of some of the Fed calls. I think Goldman also hiked their expectations for Federal Reserve rate hikes into the winter. Euro stock futures getting some 0.4%, similar gains for futures here in London, and of course DAX futures. In London, the big story is of course Liz Truss for the first time, day 2 in the job, coming up with that package to help the cost of living crisis with energy. Now, Spain, IBEX getting some 0.6%. It'd be nice to also have a breakdown of the sectors, which I'll get to in a second. If you look at what the futures are saying, and we've seen this in the past, where here in Europe they start on a good footing, and then there's a bit of anxiousness out there as there's a reversal. Let me look at what Euro's doing. Currently 0.9999. I mean, the Euro story is really one of dollar strength. So we look at dollar, we look at what Fed officials said, and then we look at the ECB. It's at 12:30 today. Cross asset, we were talking about yields, one of the most important benchmarks for global markets. If you look at US 10-year yield, 3.2313, and then S&P futures also gaining 0.2%. So as we've been saying, the ECB holding its first monetary policy meeting today since July, when officials raised the key rate for the first time since 2011. Now, for more, we're joined by Bloomberg's Maria Tadeo, who's in Frankfurt for us. Maria, so good to see you. So the ECB on track for another rate hike. The question is really, how aggressive can they be at this point?
Yes, Francine, and that is the only question, because the European Central Bank has to hike rates. This is a single mandate central bank. Is at price stability close but below 2%. And if you look at the picture, the real life inflation across the euro area in some countries is now more than triples that goal. The only tension, if anything, going into the meeting is, will it be 75 basis points or is it a 50 basis points hike? When you look at the 75 basis point camp, what they argue is that there is now a window and you have to take quick, decisive action. This is about the credibility of the institution. The 50 basis points on the flip side, what they say is there is no denying this is an economy that is facing potentially a recession and a full-blown energy crisis. Which way this falls, we'll have to wait until 2:15 Frankfurt time to find out. And Francine, just very quickly, today we're here in Frankfurt at the ECB, but tomorrow there is a very important energy ministers meeting in Frankfurt at this point, in Brussels, excuse me. It does feel like this is a story, the energy, the economy, the ramifications of it, that has become a single subject now for policymakers.
Yeah, they certainly have, Maria, because of that weakness, of course, in the Eurozone. She rightly says, is it 75 or 50 basis points? Maria Tadeo, they're in Frankfurt. Of course, we'll have comprehensive coverage of the ECB rate decision and Madame Lagarde's news conference today. That starts at 1:15 p.m. UK time. So stay tuned for that. Now, joining us to talk about the markets and this big rate decision, everything to do with energy prices, Maria Monici, multi-asset fund manager at M&G, and Christine Aquino from our FX and rates team. So thank you both for joining us. What a day, Christine. I don't know whether we just look at dollar strength, because also this makes it a nightmare for a lot of European companies.
Absolutely, Francine. And one of the things that we're going to be watching out for the ECB today is whether Madame Lagarde does in fact mention the euro and its excessive weakness, or whether they call it excessive weakness. We know, of course, that anytime a central banker pays attention to the currency and tells everyone that they're paying attention to the currency, that is significant. That's certainly something that we're seeing out of Japan. That's something that we're seeing out of China. If we see it out of the ECB today, that could be very interesting moving forward.
It certainly will be. Maria, what are you expecting from ECB today?
Well, I think what we've seen is a really strong raise of the dollar versus all other currencies. Today, the market is kind of prepared for a significant hike from the ECB. The eyes have been focused on monetary policy for the past few months. So I think if it's going to be a 50 or 75, the market is probably prepared for that. I think the risks coming ahead of us are really more linked to the fiscal policies that we might see put in place really across the world, and in particularly in Europe in this case, and the meeting tomorrow is also extremely important in that respect. It's probably an area that investors have focused a little bit less until this very moment.
So, Christine, I mean, does it, in the greater scheme of things, does it actually make a material difference if the ECB hikes by 50 or 75?
Well, listen, Francine, I think it is largely priced into the markets. There was a little bit of a pullback in pricing heading into the meeting today, but whether it's going to be today or in October, I think they are bracing for that jumbo rate hike. What I would be interested to find out today is whether the ECB validates the idea that there could be multiple jumbo rate hikes moving forward, and also what they're going to be saying about their asset purchase program, because again, that's another lever of policy that could potentially not be priced into markets just yet, because there's been an overwhelming focus on the rate hike aspect of this. But again, remember, there's also this other side of policy that could have very, very big implications, especially for yields in the region.
So what's the right tool, Maria, to do this, actually? Because if the ECB is hiking too aggressively in a recession, I mean, this could really spell disaster.
Absolutely. I think, there's been an extreme focus from markets on the monetary policy aspect of it, on the interest rate hike element of it. But actually, we can't forget that, monetary policy is only one leg that we walk on. There is a fiscal policy, which has an incredibly important role, especially in the current situations we are in, the energy crisis, the inflation issues, and what it might bring for a potential economic slowdown. So I think what we should really watch carefully is how fiscal policies unfold and what the differences approaches are across countries. That will really could make a big difference for markets.
Yeah, and Christine, I know something that caught actually both of our eyes is Goldman Sachs lifting their expectations for Fed hikes in September and November. I mean, if they're expecting them to be more aggressive in the US, does it automatically transfer also in Europe needs to do more?
Well, that's kind of the expectation, right? But then that also creates such a big headache for a lot of the policymakers outside of the US, because again, it creates this issue of the Fed really kind of going ahead of everyone else in terms of tightening, and then everyone else having to catch up. And this is the big reason why we've seen this overwhelming dollar strength just coming flowing through this year and just stampeding across all the other currency markets, precisely because there's this perception that the Fed really is ahead of the game and no one else can outdo them.
Yeah, and this means that actually the dollar, at what point does the dollar stop rising? Is a quadrillion, trillion dollar question, Maria.
I think is a very, very key question. I mean, we've seen an incredible race this year. I mean, even just for the fact that we have seen such a huge move, you could expect some retracement on that. Obviously, some of the underpinning of that is the differentials in interest rate policies, but there's also some fundamentals element to it that are more specifically linked to the condition of the energy crisis hitting harder Europe than the US, but also capital flows in different parts of the world. I think one area that could be quite interesting to watch in the coming months is actually the yen, which has been extremely weak this year. Also, from an interest rate perspective, the policy that has been put in place very different, obviously, from what we've seen in the US, but also capital flows going in the opposite direction of a yen strength. I think if we might see some slowdown in the economy, some biggest worries about a recession, I think yen could still prove to be quite an interesting place to be from a more defensive standpoint.
Yeah, and this is one of the things that actually, the themes that we were talking about yesterday with yen. If you look at the global imbalances, again, as it plays out to dollar, is there anything that will stop the dollar rising further?
Well, I think it really is a matter of all these other central banks kind of mounting a greater defense of their own currencies, right? It's a little bit of a reverse currency war where we're now talking about curbing excessive weakness in a bunch of other currencies. But then, of course, we know that this only works if it is a bit more of a concerted effort. We're not necessarily seeing that yet. We are seeing certain central banks expressing worry or concern over their weak currencies. But until there's kind of this more concerted effort against dollar strength, it's really hard to see what stops it in its tracks, Francine.
Great. Thank you both for joining us on this important ECB day. Christina Kino there from our MLive team. Maria Medici, a multi-asset fund manager at M&G, stays with us. In the meantime, we're just getting some breaking news out of Darktrace. Now, shares of Darktrace are tumbling as much as 30% after the U.S. private equity firm Thoma Bravo said it did not intend to make a takeover offer for the cybersecurity firm. Now, they had Darktrace, which I remind everyone is also London-based, had revealed it was in early discussions with Thoma Bravo about a possible takeover last month. But today they said an agreement could not be reached on the terms of a firm offer. That share price down 27%. Coming up, China continues with its COVID-0 approach, locking down the city of Chengdu after an increase in cases. But just how costly is this strategy becoming for the economy? We'll discuss that next, and this is Bloomberg.
What do you think is the future of the US dollar?
For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
How much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
Welcome back to The Open, everyone. We're 11 minutes into the European trading day, and we're actually holding on to gains. Now, stocks are rebounding. Again, there's a lot of worry, or there's a lot, of course, of positioning ahead of that ECB meeting. Most investors expect 75 basis points, but because we had a bit of weaker data of the Eurozone, a couple of them now flipped to 50 basis points today. Treasuries also pushing higher, lowering the U.S. 10-year yield to about 3.22. And we did have a couple of, for example, the Reserve Bank Governor of Australia, Philip Lowe, commenting on the case for slow monetary tightening getting stronger as borrowing costs climb. So look at all of those dynamics. Now, the Chinese megacity of Chengdu, home to 21 million people, has extended a week-long lockdown in most downtown areas after COVID-19 cases increased. President Xi's commitment to the COVID-0 approach is becoming more costly for China's economy, with growth forecasts being slashed and factory and retail activity slumping. Well, joining us now is Tom Orlik. He's our chief economist for Bloomberg Economics, and we're still joined by Maria Muniki, multi-asset fund manager at M&G Investments. Tom, first, I'm excited that you're not in Washington and you're with us here, and you understand China like few people do. You even wrote this book, China, the Bubble That Never Pops. Is it popping now?
I really hope not, Francine, because the second edition of the book is about to be published, and it would be deeply embarrassing for me if it did. But certainly there is extreme stress right now for any country in the world. Attempting to maintain a zero COVID stance is going to come at an extreme cost. And we see that in China right now with Chengdu, a city of 21 million, accounting for almost 2% of China's GDP, locked down. At the same time as that, China is attempting to manage a really significant correction in the real estate sector. These two things together add up to a big drag on growth.
But so does it mean that policymakers, and it feels like they've been reluctant to do more, just need to go full in? So
The challenge, Francine, is you can't really go full in on stimulus in an economy which you're also having to lock down to prevent COVID. Right? The two forces are just moving in opposite directions.
So is there going to be a change in the zero COVID policy going forward?
So the consensus on this for months has been, we get to the party congress, which we now know is on October the 16th. Xi Jinping gets a third term as preeminent leader, and then the exit from COVID-0 begins. The big doubt around that is, well, October 16th isn't that far away, and we don't seem to have seen any planning, any strategizing, any debate about what the exit from COVID-0 looks like. Neither have we seen China move to acquire the mRNA vaccines they'd need to give their population the best shot at resilience from the virus. So my assumption is we still start moving in that direction after October the 16th, because how could we not? But the preparatory steps don't seem to be being taken.
So, Maria, from a market standpoint, what do you do with China?
Well, I think it's certainly something to watch because of the huge implication from a macroeconomic perspective. And things are obviously very complicated, which we are seeing also across the globe. But the issue with China is also we have much less transparency, much less visibility of what is going to happen. So it is really something to watch closely, but where we have very little information of what we can expect going forward.
Does it actually change your perception for emerging markets, or is there anything that you'd be buying right now as an alternative to what we're seeing here in the West?
Well, I think there are some markets that have actually performed pretty well this year in EM, and there is some opportunities out there, probably, as I say, mainly outside China in that respect. But there is certainly, opportunity for diversification within a portfolio still. Watching the overall issue of global growth, which is something that, will probably touch more broadly than, single countries.
Tom, when you look at real estate in China, is it really worse this time, or is it because of the other dynamics?
So certainly COVID-0 isn't making life any easier. People who are locked in at home can't really go to a showroom and buy a new property. At the same time, this property correction has been years in the making. We've had years of over-leverage, years of over-investment. What that means is that China's property supply is running way ahead of what we call fundamental demand. Demand not for speculators, but for people who actually want to buy a home and live in it. The best case scenario for China is that there's a correction which is kind of managed with a moderate drag on growth from property stretching over the next several years. The nightmare scenario for them is that they lose control of this. The correction happens quickly, a crash in 2022 and 2023. If that happens, look out below.
Yeah, so if they do lose control of it, what happens to the world economy?
So China's real estate sector has been the single biggest contributor to China's growth, and probably the single biggest contributor to demand for a number of commodities. Right. Think about iron ore, for example. So we're certainly going to see a drag on property, which is going to take fractions of a % off China's growth in the years ahead. we're certainly going to see that also dragging on the big commodity producers like Brazil and Australia. If it happens quickly, well, that's the sort of thing which brings a financial crisis into view for China with bigger repercussions for the world.
So that means less increases from the Fed?
So China's actually giving the Fed a bit of an assist right now in a kind of strange way, right? When we think back to 2008, the big contribution of China was that enormous stimulus which got the world economy going again. The crisis right now, though, for the US isn't growth, it's inflation, right? So in a sense, the weakness in China is actually helping Europe and the US out. If China did an enormous stimulus, ramped up its demand, we'd see oil prices coming back up, we'd see agricultural prices coming back up. That would actually make the inflation problem here in Europe and in the US that much more difficult to deal with.
And Maria, we saw Goldman Sachs increase their bets on more hikes in September and November from the Fed. Are you having to do the same?
Well, I think, we have seen, and we are seeing in this very period, probably the best window of opportunity for central banks to hike, because we are still seeing economic data which is relatively benign. We are still seeing labor markets which is relatively benign. So this is, in a way, the perfect time to be aggressive in terms of rates. I think whatever happens next will be much more data dependent. So depending on what we're seeing on leading indicators, on PMIs, but also in particular on the labor market, what's happening to the unemployment rate, and also crucially, what's happening to labor participation. Because labor participation, especially in the US, is still quite behind where we were before the pandemic. And that change in rate of labor participation can have a huge impact on what the labor market looks like. Is it going to continue to be tight, or is it going to become a bit less so?
Maria, thank you so much. And also thanks to Tom Morlick, our chief economist here in London for the week from Bloomberg Economics. That was also Maria Muniki, a multi-asset fund manager at M&G Investments. Now let's get straight to the Bloomberg Business Flash. Here is Laura Wright. Hi, Laura.
Hi, Francine. Mixed results for Elon Musk in his fight to cancel his buyout of Twitter. A judge is allowing him to add the claims of the recent whistleblower to his case, but is not letting him push back the October trial date to give him more time. The judge is also slamming Musk for not properly turning over text messages that could be evidence in the suit. Australia has passed its first major climate legislation in more than a decade. The climate change bill legislates a 43% cut to carbon dioxide emissions from 2005 levels by 2030. Enshrining the target into laws brings Australia in line with nations like Canada, South Korea and Japan, but it lags behind key allies, including the US and the United Kingdom. Reality television star and entrepreneur Kim Kardashian has a new business venture. She and a former partner at Carlyle Group, Jay Sammons, are launching a private equity firm. It will focus on consumer and media businesses. The apparel business Kardashian started back in 2019, Skims, has been valued at $3.2 billion. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Laura Wright here in London. Now, we're also getting some breaking news out of Commerzbank, the chief executive speaking at a conference over in Frankfurt. Now, he says that Commerzbank can still achieve a 2022 net income target. Of course, a lot of these banks getting a bit of a lift at the prospect of interest rates getting higher. He has said, Mr. Knopf, that they can still achieve the 2022 income targets. Now, coming up, few surprises. Apple unveils new products at its biggest product launch event of the year, dubbed Far Out. One major standout, no hike in U.S. prices despite scorching inflation. We'll have plenty more on that next. This is Bloomberg.
Recently, cryptocurrencies have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. I would characterize this as crypto learners. We have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Inflation in our country is just far too high. We're not close to the Federal Reserve's target for inflation. And so I'm quite focused, and the Fed is quite focused on making sure we do the steps necessary to bring inflation back down to its target. So I am committed to doing that. I know my colleagues at the Fed are committed to doing that. And we understand that in doing that, there may be a further slowdown in the economy.
Well, Michael Barr, Fed Vice Chair for Supervision there on inflation being far too high, speaking at the Brookings Institute in Washington. Now, this is a picture for markets overall. We're still seeing a bit of a rebound. European stocks holding on to gains at 0.3% higher. Some of the regional, advancements that we're looking at is really retail, but also some of the basic resources. Investors, though, face a harsh reality of sharp rate rises. The ECB takes center stage a little bit later today, and the question is, well, how much will they hike by? 75 basis points. Does the latest week data we had from the Eurozone push them onto 50? It's the biggest product launch of the year. Apple unveiled a new lineup of devices with one major surprise. It did not raise its U.S. prices during one of the worst years of inflation for decades. Well, Bloomberg's Emily Chang in San Francisco has more details.
Coming to you from Apple headquarters in Cupertino, Apple unveiling a slew of new products, including new iPhones, watches, and AirPods. Perhaps the biggest surprise isn't the new technology, but how much it costs. Despite record inflation, Apple isn't raising the prices on its new phones. So you can buy a new iPhone 14 for the same price you could buy an iPhone 13 last year. Of course, there are technological upgrades, especially when it comes to the Pro, thinner, faster, longer battery life, better camera technology, also satellite capabilities for all the new iPhone 14s, meaning you can send an emergency SOS from wherever you are in the world, even if you don't have service. They also unveiled a new Apple Watch Ultra, a smartwatch geared toward outdoor enthusiasts. They call it your own personal dive computer, if you will, also undercutting Garmin, the nearest competitor on price, by a few $100s if you're looking at the higher end. And when it comes to AirPods, we got the first upgrade there in 2 years. Of course, the big question is, will consumers buy any of these new products when they're already under pressure, facing higher prices, everything when it comes to gas and groceries? So all eyes will be on just how big this new Apple upgrade cycle will be. Emily Chang, Bloomberg, Cupertino.
Now, coming up, we speak to the Goldman Sachs Managing Director and Chief European Economist. He's Yari Sten, ahead of today's ECB rate decision. We also look at currencies, the dollar firm, the yen actually erasing some of the losses after Japanese officials arranged a meeting to discuss international financial markets. Now, dollar strength putting pressure, of course, on some Asian policymakers to step up efforts to curtail currency weakness. This is Bloomberg. going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city, it's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Ferro. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Showtime, the ECB is on the brink of a jumbo 75 basis point hike, even as recession risks rise. EU leaders are readying emergency energy measures. As long as it takes, Phil Brainard joins a chorus of Fed speakers vowing to do whatever it needs to beat inflation. Plus, historic drop. Sterling hits a Thatcher-era low on Liz Truss's first day in office. She lays out her plan to tackle soaring gas and power prices today. This is a picture for the markets. Of course, there is still a lift. European stocks gaining some 0.3%. They're edging higher. Investors prepared for the potential of unprecedented monetary policy tightening by the ECB. The question is, they'll tighten. Is it 75? Is it 50? We'll have a good conversation with Yari Sen of Goldman Sachs. Also, the dollar pretty much firm, the yen erasing some of the losses after Japanese officials arranged a meeting to discuss international financing conditions. On to the sectors on the move. That's usually quite telling. We also had a terrific briefing from Tom Orlik on what China's doing right now. Insurance, banks, and basic resources gaining between 0.7% and 1.3%. Under pressure, retail 2% lower, auto parts 0.8% lower. So that's a look at the sectors. Let's also move on and talk a little bit about the ECB holding its first monetary policy meeting since July. Officials raising the key rate for the first time since 2011. Now, the central bank is on the brink of a pretty jumbo, 75 basis point hike in interest rates to wrestle back a control over record inflation, and that's even as the risk of a Eurozone recession rises. Let's get straight to Yari Sen. He is Chief European Economist at Goldman Sachs, and he joins us now. Yari, good morning. An exciting day, especially if you're a Euro watcher. What are you expecting from the ECB?
Yeah, we do think they will hike by 75 basis points today. The inflation numbers have been high. The commentary has been hawkish, and of course the euro stands at very low levels, and so we think that's going to be enough to convince the council to opt for 75 basis points. Now, of course, there have also been voices supporting a more steady pace, and so we don't think it's a done deal, but given what the inflation numbers are doing, we do think that's the more likely outcome. So we do look for the 75. Now, I think the key is actually going to be how they explain this rate move. And here we think they will say it's an unusually large step that's justified given what inflation is doing, but it does front load some of the adjustment towards the terminal rate.
Yeah. So, Jari, if you look at the four things that traders are watching, and we have a great story by Van Ram saying, of course, it's the margin of interest rates hikes, but it's also forecast for inflation. That's to do with energy prices, transmission protection instrument, and then euro and what happens to the currency. Out of those four, what is the most interesting?
Yeah, I think the most interesting is the increment and the forward guidance or the communication around that. But I think the other aspects are worth watching out for too. So on the projections, I think the questions are how much do they cut the growth numbers? Do they show a technical recession? So we think they will lower the growth numbers substantially, but stay away from showing a technical recession. And then the inflation projections will go up very substantially. We think the key number is probably the 2023 number, where we think they will go to 4.5% as a motivation for taking a big step. Now, of course, we will also watch commentary on the exchange rate. And here I think they will stick to their mantra that they're not targeting the exchange rate, but that the weakness of the exchange rate does matter because it does affect the inflation outlook, particularly at a time when energy prices are rising rapidly and many commodity prices are denominated in dollars.
Jari, everybody at the moment forgets that there's also the Italian election, and we don't exactly know, if that mechanism needs to be used. For the moment, everything seems pretty stable. Are we being lulled in a false sense of security?
Well, it is striking how well sovereign spreads have held in despite a pretty substantial repricing of the rate path and a big increase in core interest rates in Europe. I think that's on the back of sort of two things. One is that the signals out of the center-right coalition in Italy that's likely to stay ahead in the polls has been sort of fairly conciliatory when it comes to the policy setting, and secondly that the TPI has been very effective in keeping expectations under wraps as far as sovereign stress goes. But we do still worry that there is lingering sovereign stress in the background. The euro area economy is slowing, particularly in Italy, and we do think the election is going to create some policy uncertainty in October, and we do think BTP spreads will widen somewhat more from here, we think towards 250 basis points.
Jari, when you look at weaker euro, I understand that, of course, it fuels inflation, but at the same time, you can export more. So how will the ECB, and I know, of course, the central bank never targets currencies, but how do you think they're viewing this?
Yeah, I mean, it's a trade-off, as of course the bigger rate decision here, where you have on the one hand very high inflation, on the other hand you have the prospects of a recession. So we think that trade-off matters a lot. But I think for today, what will dominate is that inflation is high. The recent prints have surprised to the upside. We think the inflation metrics will rise somewhat further. And so I think that will dominate today. Now, looking into the fourth quarter, looking ahead here, we do think they will then slow the pace in October as you are getting closer to a more neutral level of rates, and also as the economy is entering recession.
How bad do you think the recession will actually get in Europe? And does it make sense to front load? What would you do if you were in charge?
So I think the latest data points have been a little better as far as the third quarter growth pace is concerned, but the energy crisis still looms large, of course, and we do think a recession over the next couple of quarters is very likely, centered, of course, in Germany and in Italy, where the gas dependence is higher. Now, we are seeing some offset on the fiscal side, and of course also some energy measures are being discussed at the EU level that might mitigate this, but I do think a recession is coming. Now, given where interest rates are at the moment, they're clearly low, they're clearly below neutral, inflation is high, so I think there is a case to move rapidly now, but then I think there's also a case to then slow down later in the year as you are in recession and as rates approach more normal levels.
Okay, how do they combat, I don't know whether they want to combat, but this ever-rising dollar, and I know that Goldman Sachs also increased your forecast for interest rate hikes from the Fed September and November. Can the ECB do anything about that?
I think that is going to be a consideration over the next couple of meetings to make sure that the rate differential doesn't widen too much. Because I think that has been one of the driving factors of the weakening euro. Now, in the near term, we actually think that the euro will weaken somewhat further to 97 cents. And so I think that is going to be part of the consideration. But ultimately, of course, I think most of the euro weakening has really been driven by a deterioration of the growth outlook, by the energy crisis, and of course also by the risk that it could be a more severe recession than what's currently being anticipated.
Jari, thank you so much. As always, Jari Stender, Chief European Economist at Goldman Sachs. Now, we're also getting a bit of breaking news out of Mr. Lindner of Germany. There's no need for a quick decision on Commerzbank stake. He also says the government is very satisfied with Commerzbank performance. He's reiterated the need to restore German borrowing limits. So we'll have plenty more, of course, on that throughout the day. Coming up, Finnish-based insurance group Sampo is planning a dual listing in Stockholm to boost liquidity. We speak to the chief executive next. This is Bloomberg.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open, everyone. 42 minutes into the European trading day. What we're seeing is green across the board. Treasury is also pushing higher in the U.S. The dollar firm, the yen actually erasing some losses after Japanese officials arranged a meeting to discuss international financial markets. The focus firmly, of course, on the ECB, on euro level. And again, investors are now facing a sharp reality of sharper, higher interest rates also here in Europe. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. U.S. National Security Advisor Jake Sullivan is warning that a Chinese invasion of Taiwan remains a distinct threat. He's insisting the White House's position over the island's status has not changed, despite China's claims to the contrary. He spoke to Bloomberg for the David Rubenstein Show peer-to-peer conversations.
I think it remains a distinct threat that there could be a military contingency around Taiwan, and the People's Republic of China has actually stated as official policy that it is not taking the invasion of Taiwan off the table.
In the UK, new Prime Minister Liz Truss will today set out her plan to tackle soaring energy bills. It will be her first significant act as leader. Truss has been trying to evoke memories of her Tory predecessor, Margaret Thatcher. The UK hit another unwelcome comparison to the Thatcher era yesterday, with the pound falling to the lowest level against the dollar since 1985. In the US, President Joe Biden is holding back on a decision to scrap Trump-era tariffs on Chinese imports. We're told that as the administration studies ways to help businesses seeking relief, any decision before the US midterm elections in November poses domestic and international risks for Biden and his fellow Democrats. The Federal Reserve's battle to bring inflation under control will likely cause more harm to the US and world economy than anticipated. That's according to a pair of papers set for presentation at a Brookings Institution conference this week. One says the Fed will have to push unemployment higher to hit its inflation target. The other warns of dangers of developing nations from rising US rates and a strong dollar. China has extended the lockdown of its megacity in Chengdu, home to 21 million people. It's the largest city to shut since Shanghai earlier this year. The decision to prolong the week-long lockdown shows Beijing remains committed to COVID-0, even as it becomes more costly for the economy. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Laura Wright in London. Now, a Finnish-based insurance group, Sampo, is hosting an investor update in London today, outlining its key underwriting profit growth opportunities. The leading P&C insurer in the Nordic region has exceeded its financial targets and is now evaluating listing its shares in Stockholm in addition to its home in Helsinki. Well, we're now joined by the Sampo Chief Executive, Torborg Magnusson. Thank you so much for joining us. First of all, why the dual listing?
It's a pleasure to be here. Now, we've been on a journey for simplification of the group to become a pure play insurance company, and we've reached that point. We're in a good spot. We have excellent momentum in the business, growth, good profitability, and we show great resilience to the present climate in the world. So having the biggest market in Sweden and being listed and being a Nordic company for that sake, it became a very natural idea to do a dual listing in Stockholm or evaluate as such.
Yeah, why now?
Well, this was the point in time when this simplification was complete, and so this is a good point in time for it.
Okay, but I mean, you know, when you still own Nordea stock, you didn't do it, so it makes little or less sense than it did at the time. Has something changed in your thinking going forward? Is the market mood different?
I think we are a unique asset to the Stockholm Exchange, and it is for us much easier to explain the company as a pure play insurance company. And also, we've had a large number of contacts and meetings with investors in Stockholm over the past couple of years, and there is a broad interest in us as an insurance group, with actually the largest market in Sweden.
You're also, of course, an owner of Hastings, which operates in the UK. How much do you worry about the cost of living squeeze affecting Hastings?
Well, I think the Hastings Group is operating in a more challenging market than our main market, the Nordic market. But on the other hand, they are now part of Sampo Group. They are developing well and preparing for changes in the market that will come eventually, I'm sure.
Will you raise prices?
We do all the time, and that is absolutely necessary in the UK market. This will be a very painful experience for those insurers that don't.
So what's your outlook for market growth in the UK?
Well, we operate in the segment, the digital segment, that has shown the most growth in the UK market over a decade. And we don't put a number on that, but it's very reassuring to be operating in that market. What happens, though, is that we have broadened our product portfolio to include home insurance, and we see very rapid growth, more than 20% growth on an annual basis for our development there.
So to what extent is the energy crunch actually showing up in insurance operations?
Well, not directly. And our business model has shown to be really resilient, as I said, to the present climate in the world. And we even gain from the increased interest rates, of course, in our investment portfolio. So there's no direct link from energy prices to the insurance results.
So how are you positioned for rising interest rates? Of course, today is ECB day, so at Bloomberg we always say happy ECB day. This means higher interest rates, unclear whether we get 75 or 50 basis points. What does it mean for your group?
Well, technically, we will, of course, earn more on the fixed income portfolio, and to be really technical, the liabilities will be discounted by higher interest rates. But we have, relatively speaking, been in a very good position because we have a short duration on the fixed income portfolio, more so than many of our peers, and therefore we are, relatively speaking, in a good competitive position.
Yeah, what makes you the most confident about Sampo going forward?
Well, we have an exceptional track record, and we have the same people running the business. And at the moment, if you look at our results for the past few quarters, as I said, we have a combination of leadership in the digital arena, both in the Nordics as well as in the UK, combined with strong, solid results and good growth. So we will just continue to doing what we do and try to develop a little bit every day.
Thank you so much for joining us. Torbjörn Magnusson there, the Chief Executive Officer of Sampo Group, a leading property and casualty insurer in the Nordics region. Now, coming up, the UK's new Prime Minister, Liz Truss, appears to rule out funding energy support with a windfall tax on companies. We'll have plenty more on that shortly, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 53 minutes into the European trading day. The picture is stocks rebounding. Of course, Treasuries pushing higher, lowering the U.S. 10-year yield to 3.22%. In the meantime, investors here in Europe really focusing on the European Central Bank and facing the harsh reality of sharp interest rate rises. Whether they go for 75 basis points or 50 is something still that we have to see. European stocks gaining 0.1%. The DAX, though, seeing a small reversal. Now, here in the UK, the new Prime Minister Liz Truss is resisting calls to fund energy support with a windfall tax on companies. Truss was grilled on the policy during her first Prime Minister's questions in Parliament yesterday. Well, joining us now is Bloomberg's Lizzie Burden, who was at Downing Street the day before yesterday and Westminster yesterday. So how much of the energy bailout plans, Lizzie, was actually leaked?
A lot, and Bloomberg has got its hands on lots of the documents, in fact showing that they're going to cost £200 billion. This is support for consumers and businesses, but there's still much to find out. We want to know how much this is going to be targeted, how fiscally wasteful is it going to be, and also how is it going to be funded? Liz Truss, in Prime Minister's questions, her first standoff with Keir Starmer, the opposition Labour leader, yesterday, she was asked about the windfall tax, whether it would be continued. Another Bloomberg scoop, in fact, because Treasury analysis that we revealed showed that if the energy tax on companies were to be if the windfall tax on energy companies were to be continued, because of their excess profits, because of the war in Ukraine, you could rake in tens of billions of pounds for the Treasury to pay for it. She seemed to rule it out at PMQs, and then a bit of a row back on that later in the day. But then also, how much borrowing is it going to necessitate?
So what's also really interesting is actually they have one plan for the economy, and of course she needs to address the cost of living, but actually the Chancellor has gone, full swing ahead. So let's go city, I'm deregulating.
Completely, and as well as that charm offensive, also being much softer on the Bank of England. He's saying that he sees independence at the BOE as sacrosanct, that he's going to meet the Bank of England governor twice a week and then down to once a week. Really, it seems like, I know you're going to have Simon French from Pamela Gordon on later, this difference between campaign economics and government economics that he's pointed out coming into fruition. Because as well, if £200 billion of an energy package isn't a handout, what is?
Yeah, so what are we expecting? Does she need to go big in the first week to actually set the tone for what she'll do as Prime Minister?
Yeah, I mean, this energy crisis is at the heart of the cost of living crisis. So that's why she's taking it off the top of the in tray and dealing with it head on. And it should have a big impact. So our economists' analysis suggests that inflation will have peaked as a result. A recession could be avoided, although Andrew Bailey at the Treasury Select Committee disagreed with that. That maybe 75 basis points at the BOE's September meeting would be less likely. But the risk is that you continue to have inflation high in the long term because of the economy overheating.
Thank you so much, Lizzie Burden there on the UK. Now, that's it for the European Market Open. Surveillance Early Edition is up next. We'll have a full roundup, not only of the stocks to watch. Dark Trace is something that we need to keep a bit of a close eye on because it was down some 30%. Again, here in Europe, stocks still rising, not as much as they were 30 minutes ago. So we'll look also at euro levels and top currencies. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The recession, going back to what, I hope it doesn't happen, but obviously we have forecasted because we think it is sadly the most likely outcome, of course, is overwhelmingly caused by the actions of Russia and the impact on energy prices.
Inflation in our country is just far too high. We're not close to the Federal Reserve's target for inflation, and so I'm quite focused, and the Fed is quite focused on making sure we do the steps necessary to bring inflation back down to its target.
We're in this for as long as it takes to get inflation down. So far, we've expeditiously raised the policy rate to the peak of the previous cycle, and the policy rate will need to rise further.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Showtime. The ECB is on the brink of a jumbo 75 basis point hike, even as recession risks rise. EU leaders ready emergency energy measures. As long as it takes, Thel Brainard joins a chorus of Fed speakers vowing to do whatever is needed to beat inflation. Plus, historic drop. Sterling hits a Thatcher-era low on Liz Truss's first day in office. She lays out her plan to tackle soaring gas and power prices today. Now, first thing is first, let's check on the markets. Of course, sterling and a lot of the currency moves are really capturing the imagination of certain traders as we go into some of this global competitiveness, and it's extremely difficult to fight the Fed. John Authers with a fantastic piece saying that he doesn't really see what could stop the dollar's essentially unprecedented rise in interest rates. The ECB, Madame Lagarde, will have to explain, of course, her reasoning if she front loads and does 75 basis points. Extremely interesting also to see her forecasts for the future in terms of inflation expectations. U.S. 10-year yield 3.2636, Euro-Doll 99.86. This will probably have to be addressed, although I know central bankers hate speaking about currencies in some shape or form. She'll have to address this because the weaker the euro, sure, it helps with exports, but it's also much inflationary. And then finally, crude oil 88.36. Now let's look at the European map. Again, it's a big day here in the UK. We have Liz Truss, a new Prime Minister, in charge for her second full day. She'll give that package on energy with hopefully details also on how she funds it. And then we heard from the Chancellor, Kwasi Kwarteng. We know he's meeting with the JP Morgan chief executive this morning. Yesterday, he met 14 leaders from the finance industry and said he will deregulate and spur the City of London. The DAX unchanged, the CAC 40 unchanged, and the FTSE MIB in Italy down 0.1%. So the ECB holding its first monetary policy meeting since July, when officials raised the key rate for the first time since 2011. The central bank is on the brink of a jumbo 75 basis point hike to wrestle back control over record inflation, even if the risk of a Eurozone recession rises. Now, for more, let's bring in Bloomberg's Europe correspondent, Maria Tadeo. Maria, the big question, 75 or 50?
75 or 50, Francine, that's the only question, because when it comes to the direction here, the only way is up for the European Central Bank. Single mandate central bank, inflation now clearly way above target. They have to hike. Now, is it going to be 75? Will it be 50? When you look at the 75 basis points camp, what they say is right now there's a window. And in that window, you have to be decisive and you have to take swift action. Ultimately, this is about the credibility of the institution going forward. You have to show that you can get a hold of inflation. The 50 basis points camp, this may be on the minority, but they do bring up a fair argument, which is ultimately this is an economy that is facing the risk of a recession, but also now a full-blown energy crisis. The solutions for that energy crisis will be debated tomorrow, but for the time being, you've seen the market action. These are prices up for Europeans. They're coming at a very, very heavy cost. So ultimately, the response, which way this is going to fall, we'll find out in about a few hours' time here in Frankfurt, of course, then followed by that press conference by Christine Lagarde.
Yeah, I mean, there are three things also that Van Rom said we should be watching at the margin. Of course, euro, when you look at that tool, that mechanism to deal with rising yields. I know Maria and I will also be following the Italian elections very, very closely, and then inflation forecast. Maria, thank you so much. As always, Maria Tadeo there in front of the ECB in Frankfurt. Now, of course, we'll also have comprehensive coverage of the ECB rate decision and Christine Lagarde's news conference today from 1:15 p.m. UK time, so stay tuned for that. Joining us now for the next 20 minutes to talk about ECB, to talk about the UK, really to talk about everything. Simon French, Chief Economist at Panmure Gordon. Simon, I mean, first of all, good morning.
Good morning.
I mean, are you just relieved that you're not working at the ECB? Because it's a bit of a nightmare. Do you front load or not in this kind of environment?
I don't think they know, to be honest, and I think what we get today will be the updated staff projections and some estimate, probably not stated explicitly, but I would be staggered if it doesn't get mentioned in questions, what the terminal rate is for ECB deposit rates. Because actually what we heard from Isabel Schnabel, Philip Lane ahead of blackout was the idea that that question of front loading, really the scale of that, whether it's 50, whether it's 75, for people trying to trade the decision today, really depends where the staff projections and indeed the Governing Council see that terminal rate going, and therefore whether front loading looks in the context of a 200 spread or potentially higher.
That's so difficult, because if you look at the second round effects, if you look at third round, I mean, we could see so many companies in Germany and in the countries most affected by energy prices just go under.
Yes, and one of the things that actually the ECB won't have at their disposal, which we get next week, is labour cost data for Q2.
Yeah.
And that's going to be one of the big inputs for those second round effects, which the ECB won't have at their disposal. They'll go with the anecdotal, the other survey-based data that those are starting to build. But we've also heard of market shift in the commentary towards inflation expectations with the anticipation that those are a leading indicator of what wage settlements will be across the Eurozone, and therefore that persistence of inflation.
I hate beating up on economists, especially as I have one of my favorite right here on set with me. But their staff projections have been so wrong. They haven't been able to really see the crystallization of this much higher inflation. Why do we believe them now?
So I'm going to defend economic forecasters, not just in the Eurozone, not just the ECB, but across the world. What they have to do is they have to take conditional assumptions on the pathway for energy markets, and the justification from the ECB, from the Fed, from the BOE is, well, there are people with skin in the game, people watching this program who trade energy. Why should we? What is better than taking the price of people whose livelihoods are dictated by trying to price that market correctly? What has happened in successive forecasts is those curves have fundamentally shifted from what they were in the preceding forecast. That is why we've had persistent one-sided errors. That is not excusing it away, it's explaining it away, because there tends to be, not on this show, I hasten to add, but often there's a lot of shrill commentary, beating up forecasters. But those conditional assumptions, if someone can come up with a better assumption than using the market forward curve, I'd love to hear it.
Yeah, no, you're 100% fair. And at the same time, if you look at what we're living through as a central bank trying to deal with these supply shocks, and frankly, it's just not really up to them. It depends on fiscal and the fiscal support they want to give.
Absolutely, which is why the market still sees that terminal rate, it may change today, but around 2%. And you may say, well, hang on, But inflation's running at 9%. Inflation expectations are moving up. The expectation those will start to feed through into second round wage settlements. Why are we not talking about terminal rates 3, 4, 5%? And it's for just that reason, that a lot of the heavy lifting on medium term, longer term deflation is coming through from the removal of consumer spending power, expected to pass through into labour markets, the negotiating power, and therefore bring down that inflationary picture over the medium term, agnostic of what the central bank, not just in Europe, but in the UK, in many energy importing countries around the world, the heavy lifting is done by wholesale energy markets, not by policy rates.
So if you look at euro weakness, is it really only dollar strength? And if you look at these global imbalances, is there anything that will stop the dollar's rise?
If we'd had this conversation a month or so ago, I'd have said it's largely dollar strength. But you're starting to see now, when you track the relative spreads between two-year yields in Europe, in the UK, with the US, around the world, there's quite a tight relationship. But when you start to see effectively rate hikes not underscoring your currency, you're starting to see a bit of a breakdown in that relationship, suggesting it's not just a Fed story here.
All right, Simon, thank you so much. Simon French, there, Chief Economist at Panmure Gordon, stays with us. We'll talk about the UK shortly. And actually, Simon French was on the podcast and he predicted everything that happened this week. So we'll talk a lot more with Simon French about the UK in about 15 minutes from now. Coming up, though, we speak to an Italian MP, Deborah Bergamini, about the upcoming Italian election. She could also be one of the kingmakers, the rainmakers in the new coalition. So don't miss that interview. It's coming up next. And this is Bloomberg.
A push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, when the Italians vote on the 25th of September, Giorgia Meloni's decade-old right-wing party, Brothers Vitelli, is expected to emerge as the largest party in parliament. Meloni is in turn projected to be the nation's first female prime minister, propelled into office by disenchanted voters who aren't shy of betting on the tough-talking firebrand who remains dogged by controversy. Well, joining us now is Deborah Bergamini. She is Forza Italia MP, a former Berlusconi spokesperson, and of course, she's also led some of the task forces under Mario Draghi. Deborah, thank you so much for joining us. First of all, talk to us about coalition building. So what does Mr. Berlusconi want in all of this? Does he want the presidency of the Senate?
No, he has excluded this. He's not interested in any sort of political or institutional role for his future. He's very happy to get back to the Senate, where he was sent away in 2013 in an incredible political event. So he's back to the Italian Senate, and we're all glad about this, but he's not expecting anything for himself.
Do you think Giorgia Meloni to definitely become prime minister if Brothers of Italy end up being the biggest party in the election?
Well, that is a role that the President of the Republic will have. So it will be him who will decide. Of course, we expect the coalition of center-right, and this is true according to all the polls, to win by a landslide almost. So we're very positive in imagining that one of the leaders will be chosen for the role. And within our coalition, the agreement is that the party who will get more votes will have the right to indicate the prime minister. So we will respect that agreement.
I mean, of course, if you look at the polls right now, it would be a three-way coalition: Forza Italia, Brothers of Italy, and Salvini's party. Do you think that you would be, willing to ditch Salvini to have a more fiscally responsible, maybe more market-pleasing government?
But we will be responsible. We need to be responsible. We owe it to our over 60 million Italian citizens that need responses that are responsible. So we will respect all the dues that we have to do, and we will be respectful of the PNRR plan with respect to Europe. We know that there's no choice other than this. I want to underline that the center-right coalition is a coalition that dates back to over 20 years ago, and we are ruling today 14 Italian regions out of 20 and many important cities. So, we have a long experience of being together and working together for the sake of Italian citizens. Then Forza Italia is the very center of this coalition, the most moderate and liberal and pro-European force, and we will play our role into this.
Of course, when you really become or come into government, it's also about attracting foreign investment. So how protectionist do you think this government will be?
Well, I don't expect the future government to be protectionist. We live on export. You know how much has been estimated the value of the Italy brand? That's $2,000 billion. So we are an export country. We know that, protectionism wouldn't help this sort of physiognomy that we have in our economy. So I don't think there's any risk of protectionism. Rather, we will try to cut taxes because, Italy is a country where the relationship between the state and taxpayers, has never been, very positive. So what we think we will do, and we have done it in the past already when we were at the government, is to reduce the tax pressure in order to give more money to families and enterprises.
Mr. Salvini basically says that Russia's sanctions are not working. Do you agree with that?
Well, this is not what he's saying, but he's sharing a reflection on the fact that these sanctions are imposing sacrifices on our citizens. And we knew that right at the beginning. We knew that there would be some sacrifices to do in order to state our belonging to democracy and freedom. So we will continue to support sanctions. Lega and Forza Italia have done that always during the Draghi government. We know that this will mean some sacrifices, but we also know that this is the only way in order to defend our richness, our countries, and our citizens.
So, Deborah, just so I understand, 100% of the markets understand, Forza Italia's position right now is pro-sanctions. If there's a coalition agreement with the three parties, how do you reconcile the differences that you have with Salvini?
But these differences are along the electoral campaign. Each party has the right to put on the table their reflections, their ideas. But then facts are different. And the party of Salvini, along the Draghi government, always, when we had to decide whether to go ahead with sanctions or not, they always decided yes in the parliament. So they have been consistent with the general position of the center-right coalition. And they will be consistent, I expect, also in the future.
Deborah Bergamini, thank you so much for joining us today. Forza Italia MP and former Berlusconi spokesperson, of course, also in charge of one of these studies and, of course, fiscal groups that Mario Draghi put in place. So we'll have plenty more from Simon French a little bit later. I'll ask him whether the ECB should worry a lot more, or the markets should worry a lot more about the Italian election, certainly, than they are now. Coming up, the UK has a new government. It's planning to announce a new energy plan to tackle sky-high bills for people and companies. That's coming up next, and this is Bloomberg.
Cryptocurrencies have been very popular. If a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize this as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, we're getting some breaking news out of Tesla. This time, I mean, it's always Elon Musk, but this time it's not for Twitter. Tesla delivers just under 80,000 Chinese-made cars, so made in China, in their new factory over there for the month of August. That means it's up from 172% month on month, but that is probably because the lockdowns mean that it was just closed in the past. Now let's get straight to the Bloomberg. First for news, here's Laura Wright. Hi, Laura.
Hi, Francine. U.S. National Security Advisor Jake Sullivan is warning that a Chinese invasion of Taiwan remains a distinct threat. He's insisting the White House's position over the island's status has not changed, despite China's claims to the contrary. He spoke to Bloomberg for the David Rubenstein Show peer-to-peer conversations.
I think it remains a distinct threat.
that there could be a military contingency around Taiwan, and the People's Republic of China has actually stated as official policy that it is not taking the invasion of Taiwan off the table.
In the US, President Joe Biden is holding back on a decision to scrap Trump-era tariffs on Chinese imports. We're told that's as the administration studies ways to help businesses seeking relief. Any decision before the US midterm elections in November poses domestic and international risks for Biden and his fellow Democrats. The Federal Reserve's battle to bring inflation under control will likely cause more harm to the US and world economy than anticipated. That's according to a pair of papers set for presentation at a Brookings Institution conference this week. One says the Fed will have to push unemployment higher to hit its inflation target. The other warns of the dangers of developing nations from rising US interest rates and a strong dollar. China has extended the lockdown of its megacity Chengdu, home to 21 million people. It's the largest city to shut since Shanghai earlier this year. The decision to prolong the week-long lockdown shows Beijing remains committed to COVID zero, even as it becomes more costly for the economy. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. We're getting some breaking news out of Japan. The foreign exchange chief, Mr. Kanda, speaking in Tokyo after a meeting on the financial stability. Now, he says, first of all, watch the FX market with a high sense of urgency. Fundamentals alone, he says, cannot justify the recent yen move, and he will not rule out any response option if the move continues. We're lucky. We have Simon French. He said, if we don't talk yen, I'm walking out. So there it is. We have a lot of breaking news from Japan. I mean, a bit of a nightmare, actually, for Japan, because they started talking tough, and that didn't do the trick yesterday.
Yeah, and I completely disagree with Mr. Kanda. Actually, if you plot the spread now emerging between treasuries and JGBs, actually the yen has reacted almost perfectly in fit with when you compare it across the other G10 currencies. So I would say it's not an outsized move based on the sort of fundamental divergence in monetary policy. Now, is it uncomfortable? A depreciation of nearly 20%, against the US dollar? Deeply uncomfortable. Is he trying to talk the market back? Yes.
Will it work?
But the phrase, it's decoupled from the fundamentals, I don't think stands up to much analytical scrutiny. I'd love to see it working.
Yeah, but does it just go lower? I mean, given everything?
Well, the problem, of course, is how much of it is already in the price, because, of course, we talked about, at the top of the show, about terminal rates. Yeah. What does the terminal Fed rate look like, and to what degree does that move? It's actually, I think most people would anticipate that the Japanese policy rate is not going to shift much from the zero lower bound. The Fed rate probably plateauing about 4, but of course if that spread widens on expectations, not on policy action, that's what might move the yen further.
All right, Simon, thanks so much. Simon French, Chief Economist at Panmure Gordon, stays with us. We kept the best for last. We're speaking UK. This is Simon's also expertise. The Prime Minister Truss set to announce her energy plans. We'll discuss that next. This is Bloomberg.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
Showtime. The ECB is on the brink of a jumbo 75 basis point hike, even as recession risks rise. EU leaders ready emergency energy measures. As long as it takes, El Brainard joins a chorus of Fed speakers vowing to do whatever is needed to beat inflation. Plus, historic drop. Sterling hits a Thatcher-era low. On Liz Truss's first day in office, she lays out her plan to tackle soaring gas and power prices today. So good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the UK's new Prime Minister, Liz Truss, will set out her plan to tackle soaring energy bills today, hopefully with a bit more meat on the bone on how she'll fund it. One thing we don't expect to see in those plans is a windfall tax on energy companies, as Truss has repeatedly come out against the idea, believing it may discourage investment in the UK.
I am against a windfall tax. I believe it is the wrong thing to be putting companies off investing in the United Kingdom just when we need to be growing the economy. What we need to do is increase our energy supplies long term. And that is why we will open up more supply in the North Sea, which the Honourable Gentleman has opposed. That is why we will build more nuclear power stations, which the Labour Party didn't do when they were in office. And that is why we will get on with delivering the supply as well as helping people through the winter.
Well, let's bring in Bloomberg's Lizzie Burden, who's at Westminster yesterday, Downing Street the day before. So, Lizzie, much of the bill has been leaked. What are we looking out for today?
First of all, Francine, the price tag. So Bloomberg's seen documents suggesting that this is going to cost £200 billion, but lots of different figures floating around. Even with that spending, the documents suggest that people's energy bills will still be almost triple what they were last year, so not all the pain removed. Secondly, how targeted will these measures be? How much waste will there be fiscally? And thirdly, how is it all going to be paid for? You heard Liz Truss there seemingly ruling out a windfall tax, but later in the day, it seems that perhaps she might continue the current windfall tax, but not increase the rate or extend it to include power generators. Given what she said about the windfall tax, though, there's surely going to be a lot more borrowing. And we heard from the BOE Governor, Andrew Bailey, in front of the Treasury Select Committee yesterday, saying that perhaps they're going to have to put the brakes on quantitative tightening, given the impact this would have.
So, Lizzie, what are we seeing in terms of what it means for BOE? I don't know if it helps or hinders inflation. I mean, two actually both being the same thing. If you're hindered, it helps with inflation, certainly from a Bank of England point of view, and whether its independence is no longer under threat.
I think the difference is the distinction that needs to be made, and as Hugh Pill, the chief economist of the Bank of England, made at the Treasury Select Committee yesterday, between the short and the long-term impact. So Bloomberg Economics reckons that this package means inflation will have already peaked, and that means that we won't have 75 basis points at the next BOE meeting this month, and also a recession can be avoided. On that point, Andrew Bailey disagreed. He said that we are still going to have a recession. I'm interested what Simon French thinks about about that. But the difference is the long term, and our economists reckon that this package means the economy will overheat, and so rates will stay higher for longer. You mentioned about BOE independence. There's been a huge change of tune from this government on that. Kwasi Kwarteng seems to be on the charm offensive with the city. Yesterday he said that the BOE's independence is sacrosanct, and he's even going to have weekly meetings with the governor, twice weekly to begin with.
What do we know about the City of London? There seems to be this unleashing of regulation. When do we find out more?
Yeah, the Big Bang too. Again, this seems to be part of Kwasi Kwarteng's charm offensive. And finally, they seem to be taking notice of the markets. We had Philip Hammond, the former Chancellor, on this programme with us, talking about how this government needs to pay attention. Because yesterday, of course, we had a terrible day for the pound, the worst since Margaret Thatcher, although Andrew Bailey also said that that could be a lot to do with dollar strength.
Lizzie, thanks so much. Lizzie Burdon there with the very latest. We had some fun facts. I mean, last time the pound was so low in 1985, like Back to the Future was #1 on our movies list. Let's get back to Simon French. He's chief economist at Panmure Gordon. Simon, you came on the podcast 2 weeks ago. You said, be careful because the Liz Truss we're seeing in the campaign is going to be different. Is she that difference in terms of windfall tax? I know there's a bit of, softening against the Bank of England. What else?
Well, she said no handouts. That was very clear on the campaign trails. No handouts, which had to be interpreted as no transfers to support households with their energy costs. Well, what we're going to hear today is a tens, potentially hundreds of billions of pounds intervention, which won't go direct to households. It'll go via the energy companies in terms of, covering the spread between the wholesale prices they've got to buy electricity and the prices they have to charge. But I think we are seeing a difference between the campaign messaging and the realities of governance. And Lizzie also mentioned the Bank of England independence, some questions about money supply targeting, doing a mandate review. Certainly her new Chancellor, Kwasi Kwarteng, is rowing back from those comments, certainly if yesterday could be taken as an example of what they're going to say going forward.
So deal with the energy crisis, unregulate the City of London to make that boom that we've seen in the past. Does it make sense? We had this pretty scathing note from Deutsche Bank 3 days ago saying, look, we could also see an IMF intervention and actually deal with the balance of payments. Sterling has to, collapse by another 30%.
Sterling weakening and indeed nominal yields going higher on gilts is a logical way to clear the market based on the fact there's probably going to need to be additional issuance to deal with an energy price intervention on this scale. So it may not sit on the balance sheet of the government. There are some suggestions it may sit on retail banking balance sheets. We'll get some of those details later today. But either way, higher issuance, got to clear the market, bring in foreign investors by reducing the value of your exchange rate. The question is, and it goes back, actually, there's a theme running through this show. It's about the terms of trade, the second order effects that could happen from a weak pound when we're very import intensive in terms of the energy mix and the food mix and what that does to the cost of living.
It feels a little bit like an emerging market. Am I being too harsh?
I don't like that. Our personal view is I don't like that. I think that's a bit too headline chasing from some of the banks that put that out. There is no doubt that sterling has not just been hit by the strength of the dollar, but has also seen some concerns over the institutional structure, the sustainability of its dual deficits. But an emerging market tends to trade on a broader set of factors than just those twin deficit, broader institutional frameworks. And there we've seen a bit more of a firming and perhaps a break from the Johnson era. The Truss era looks to be a little bit more, if you like, consistent with some of those key architects that make it a developing market rather than an emerging market.
If you look at the focus on the City of London, is this a good or a bad thing for the overall economy? This is something that we did not hear from Boris Johnson's government, and you could argue, well, it means that they'll focus less on maybe, the counties that need it the most elsewhere.
So I think it's a good thing. I think certainly didn't expect Liz Truss on the campaign trail to talk about Solvency II and MiFID II, but she did. And sounds like they're going to review and continue to review through bills currently going through Parliament and potentially consultations coming out over the winter, whether freed from the a requirement to align ourselves with the EU27, whether there are areas which, there's always a delicate balancing act to strike between global and indeed European equivalence, alignment that is, reduces friction on financial services trade versus some stuff which I think very reasonably the FCA, the Treasury are looking at, and the Bank of England will be looking at and saying, actually, this doesn't suit the outsized nature of the UK financial sector, which is 8-9% of GDP, and therefore, to your question, does it suit the UK's interest to perhaps pursue a bit of regulatory arbitrage, given the scale of it, the financial services sector? Yes, I think it does.
Simon, go back to forecast. So when do you see peak pain for the UK economy? And I wonder whether we're maybe being too pessimistic. I mean, not we, but some banks, are also putting like inflation at 20-30%. Where do you see peak inflation next year and peak interest rates?
Well, peak inflation, I think, in this cycle will come this year. Lizzie asked what I thought about both the inflation and the growth outlook. I think that the 5-quarter recession the Bank of England had in their August MPR is no longer fit for purpose given the scale of the fiscal intervention. I still see a shallow recession in Q4 and Q1, but then recovering going Q2 and through 2023. But in terms of inflation, I expect it to peak in October between 10 and 11%, way down on the 18%, 22%, although in defense to Citigroup and Goldman Sachs, not a phrase you'd expect me to say, but in defense of them, those forecasts were conditional on no fiscal intervention. I just, at the time when clients asked me about this, I said, do we really think there's going to be no fiscal intervention? I spoke to you on the podcast. I said, there's an intervention coming. The question, one we find out today, is what that shape and the scale will look like. But certainly, inflation on that scale looks very, very unlikely with a unit cost cap on gas.
And so interest rates from the Bank of England, stabilizing at around 2.5-3%?
No, I think higher than that. I think there is, we're hearing...
How much higher?
Well, I think but in the sort of 3.5% to 4% range. Why does it need to go that high? Because what the package gives on one hand in terms of reducing headline inflation, it takes away on the other hand in terms of it takes away the really bad macroeconomic outcome that was penciled in for 2023, and therefore Hugh Pill, the chief economist of the Bank of England, talking to lawmakers yesterday, was very much talking about, actually, I'm not convinced the path has materially shifted from the curve, and the market curve does see us heading to 4% bank rate by about the middle of next year, and that is quite a considerable uplift from where we sit. So that's very much a coordinated move from the ECB, the Fed, and the Bank of England.
Simon, just brilliant analysis as always. Simon French there, Panmure Gordon's chief economist. Coming up, Apple reveals it will not be raising prices in the US as it holds its biggest product launch event of the year. More on that next, and this is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. This is a picture for stocks. They're rebounding somewhat, but off the day's highs. If you look at what, of course, investors are thinking or worrying about, they face a harsh reality of sharp rate rises. The ECB, for example, takes center stage later today. Bloomberg Economics predicting a 75 basis point increase to front-load tightening, even as the region grapples with an energy crisis. Now, at its biggest product launch of the year, Apple unveiled a new lineup of devices with one major surprise. It did not raise its U.S. prices during one of the worst years for inflation in decades. Bloomberg's Emily Chang has more of the details.
Coming to you from Apple headquarters in Cupertino, Apple unveiling a slew of new products, including new iPhones, watches, and AirPods. Perhaps the biggest surprise isn't the new technology, but how much it costs. Despite record inflation, Apple isn't raising the prices on its new phone. So you can buy a new iPhone 14 for the same price you could buy an iPhone 13 last year. Of course, there are technological upgrades, especially when it comes to the Pro. Thinner, faster, longer battery life, better camera technology, also satellite capabilities for all the new iPhone 14s, meaning you can send an emergency SOS from wherever you are in the world, even if you don't have service. They also unveiled a new Apple Watch Ultra, this a smartwatch geared toward outdoor enthusiasts. They call it your own personal dive computer, if you will, also undercutting Garmin, the nearest competitor on price, by a few $100s if you're looking at the higher end. And when it comes to AirPods, we got the first upgrade there in 2 years. Of course, the big question is, will consumers buy any of these new products when they're already under pressure, facing higher prices, everything when it comes to gas and groceries? So all eyes will be on just how big this new Apple upgrade cycle will be. Emily Chang, Bloomberg, Cupertino.
Now let's bring in Alex Webb from Bloomberg. Quick take for more analysis. Alex, don't do what Francine does. they didn't raise prices, and like 2 months ago, I got an Apple 13. I should have called you before making that decision.
Yeah, but ultimately, maybe the biggest surprise is there weren't that many surprises. It's not a significant upgrade. So actually, yeah, you might be getting a little bit more for your money this time around, and the prices are the same as they were for this, but it's not vastly different from this iPhone 14. There were a lot of comments that actually it was the smallest upgrade that people could remember.
Yeah, but given that inflation, we're expecting it to rise by so much, and they haven't raised prices, does it show us that they're worried about market share, that they're worried about spending?
Well, the thing was quite interesting heading into this is they've been reporting from our colleagues in Taiwan about the number of iPhones they were expecting to manufacture, the number they've ordered from their suppliers, and actually the number is flat compared to last year. Now, usually you would expect with an upgrade cycle that you'd be selling more iPhones. And the fact that it's flat does speak to the suggestion, at least, that there isn't going to be as much consumer spending. We know this from other places. So keeping the price flat, the street took pretty positively because they think that maybe actually that will drive some more buying than had been expected.
So then they focus on the watch, on this, what's it called, the Ultra watch, which frankly I will never ever use because I'm not an iron woman or not in that kind of high competitive space that they're going after.
Yeah, so it's interesting because Apple has about 36% market share in smartwatches in total.
Yep.
But in the space of more than $500, Garmin really dominates. The people who are marathon runners, rock climbers, divers, they far prefer Garmin's. And so Apple is really coming after Garmin in that space. The thing that's and it is coming at a lower price point than Garmin. Interestingly, the battery life is not as good as what Garmin is able to do. So, the hobbyists maybe there is still a reason why they might go towards Garmin, but Apple is coming after them.
Alex, is that a gimmick, or they can really, really make a lot of money? I don't know how many Garmin are sold, for example, a year.
I mean, look, Garmin is a far, far, far smaller company than Apple, which kind of probably speaks to the scale of it. You don't forget the iPhone still accounts for 50% of Apple's revenue, and Apple Watch, it doesn't even break out individually; it just has it in sort of other devices. So that which includes things like HomePod, the AirPods, all these things. It lumps them all in together, which kind of speaks to maybe how big a market it is. Just, nothing to sniff about, but not anything near the iPhone. Sorry.
iPhone. Alex, thanks so much. Alex Webb there from Bloomberg. Quick take on Apple. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. U.S. National Security Advisor Jake Sullivan is warning that a Chinese invasion of Taiwan remains a distinct threat. He's insisting the White House's position over the island's status has not changed, despite Chinese claims to the contrary. He spoke to Bloomberg for the David Rubenstein Show, peer-to-peer conversations.
I think it remains a distinct threat that there could be a military contingency around Taiwan, and the People's Republic of China has actually stated as official policy that it is not taking the invasion of Taiwan off the table.
In the UK, new Prime Minister Liz Truss will today set out her plan to tackle soaring energy bills. It will be her first significant act as leader. Truss has been trying to evoke memories of her Tory predecessor, Margaret Thatcher. The UK hit another unwelcome comparison to the Thatcher era yesterday, with the pound falling to the lowest level against the dollar since 1985. In the US, President Joe Biden is holding back on a decision to scrap Trump-era tariffs on Chinese imports. We're told that as the administration studies ways to help businesses seeking relief, any decision before the US midterm elections in November poses domestic and international risks for Biden and his fellow Democrats. The Federal Reserve's battle to bring inflation under control will likely cause more harm to the US and world economy than anticipated. That's according to a pair of papers set for presentation at a Brookings Institution conference this week. One says the Fed will have to push unemployment higher to hit its inflation target. The other warns of the dangers of developing nations from rising US rates and a strong dollar. Australia has passed its first major climate legislation in more than a decade. The Climate Change Bill legislates a 43% cut to carbon dioxide emissions from 2005 levels by 2030. Enshrining the target into laws brings Australia in line with nations like Canada, South Korea and Japan, but it still lags behind key allies, including the US and the UK. China extended the lockdown of its megacity Chengdu, home to 21 million people. It's the largest city to shut since Shanghai earlier this year. The decision to prolong the week-long lockdown shows Beijing remains committed to COVID-0, even as it becomes more costly for the economy. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Laura Wright. Now, coming up, cashing in with the Kardashians. Well, reality TV star and billionaire entrepreneur Kim Kardashian is starting her own private equity firm, so we'll have plenty more on that next. This is Bloomberg.
How much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Inflation in our country is just far too high. We're not close to the Federal Reserve's target for inflation, and so I'm quite focused, and the Fed is quite focused on making sure we do the steps necessary to bring inflation back down to its target. So I am committed to doing that. I know my colleagues at the Fed are committed to doing that. And we understand that in doing that, there may be a further slowdown in the economy.
Michael Barr, Fed Vice Chair for Supervision on inflation being far too high. Now, reality TV star and entrepreneur Kim Kardashian has a new business venture. She and former partner at Carlyle Group, Jay Sammons, are launching a private equity firm focusing on consumer and media businesses. Now, for more, let's bring in Bloomberg's Danny Berger. Danny, I was obsessed with this story. I mean, this is quite incredible because there was a lot of celebrities going to private equity, but actually, I don't know whether it means it's the peak of the industry. Actually, it's genius because she can give them so much exposure.
Yes. See, this is exactly the thing for him. When I first saw this story, I was like, oh my gosh, another celebrity. Maybe it's like the SPAC boom, all these celebrities got in and it represents the peak, but actually, I mean, there have been celebrities doing this for some time and they've been successful. Ashton Kutcher, Snoop Dogg, Serena Williams, they all have VCs. And when you think about Kim Kardashian, I mean, she's run these massive businesses. I mean, she's gotten $4 billion worth of valuations on some of them. She's used to this. Her reach is massive. I mean, it kind of is a really good move in a lot of ways, especially for this Carlyle investor. He was in consumer goods. He's the investment partner. She's the operating partner. It makes sense to me.
So she doesn't choose, right? I mean, does she choose the companies? Or I guess if you have her on the other line, you probably take that call in that meeting.
Well, so the way that a private equity company a lot of times will work is you have someone who does sort of the investing of it. So we'll do the due diligence. We'll do sort of the wonky financial part of it. And then you have
the identifying?
So that comes she first, definitely could. Either of them could do deal origination. So you identify, often it will be more the investment partner, but her job likely will be operational, which is you actually work with the companies and probably post about them on Instagram.
Post them on, I mean, how many, I think she has like millions of followers. What does it tell us about the market overall?
Well, the market overall, it's a tough time for private equity, but a brand name that can get you money right now.
There you go. Danny Berger, thank you so much. Our brand name gets us money. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Katie Lyons in New York. Anna Edwards here in London. We'll look at market reaction. It's ECB day, so don't miss what the market is looking at, which is higher interest rates. It's 75 basis points. Is it 50 basis points hike that we get from ECB? We'll hear from Madame Lagarde a little bit later on. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are in Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Going forward, there's going to be far more turbulence.
The dollar is ending up as the safe haven of choice by default.
All in, I think it's a bearish market and rates are going up globally.
Fed have laid out their course. They're going to be hawkish.
We do think that central banks need to move aggressively over the course of this year.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Investors watching the Fed's next move will focus on a speech today by Chair Jerome Powell. Meanwhile, Australia goes against the grain. Its central bank chief signals a potential end to outsized interest rate hikes. The European Central Bank is on the verge of a jumbo rate increase, though. A survey indicates the ECB will raise rates today by 0.75 percentage points. And President Biden puts off a decision on whether to scrap Trump-era tariffs on China. The administration is looking at ways to help businesses seeking relief. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London, Matt Miller and Kaylee Lines with me in New York. Of course, modest gains for European equity markets today, Kaylee, but here in Europe, waiting for the ECB today.
Absolutely. We're all awaiting that decision, which will come in less than 3 hours from now, Anna. But I would note that after the rebound we saw in U.S. stocks yesterday, the rebound was pretty substantial in Asia overnight as well. Even though Hong Kong and China were actually down on the day, you had some outperformance from the likes of the Nikkei in Japan. That helped lift the MSCI Asia Pacific Index as a whole by about 1%. So coming off that lowest level since May of 2020 that we hit yesterday. You also had outperformance from Australian stocks, and that is really where the story was for me overnight. We had bond yields coming in substantially in Australia. That 3-year yield down 16 basis points after the RBA Governor Philip Lowe signaled that the case for a slower pace of rate hikes is becoming stronger. That makes the RBA kind of an outlier among G10 central banks, and among G10 currencies. As a result, the Aussie dollar is one of the weakest against the US dollar today, down by about 0.5% or so to 67.32 at the moment. And of course, the Japanese yen is also a story that we we are watching. You have Japanese policymakers from the Ministry of Finance and BOJ meeting earlier today to discuss the markets. The first time that has happened since June, but really what they're probably discussing is the weakness of the Japanese yen, which is true once again today. We are at 144.10. This is the handle we haven't seen going all the way back until August of 1998. And it raises a question, Matt, of whether or not intervention in some form may be coming down the line.
Yeah, absolutely. We're all watching for that. Yesterday in the U.S., we saw a monster bounce in stocks, a turnaround after Lael Brainerd said that the rapidity of the tightening cycle creates risks associated with over-tightening. And so that combined with really low oil prices, kind of a collapse in the oil market, 5 or 6%, created this bounce, which is the biggest that we've seen almost in a month. Dan Curtis, our producer in London, points out that these are both on Wednesdays. Should we read something into that? I don't think so. Today, in terms of futures, we're looking at some slight gains here. Well, very slight, 1/100th of 1%, but we have seen futures in the green all morning. The dollar index continues its climb, and oil right now is little changed. But look at this, Texas Intermediate at 82. We saw with an 81 handle earlier. We saw Brent with an 87 handle. So really coming down, and that creates tailwinds for the market as well. Bitcoin right now off about 1%, still below $20,000 at 19,234. But I think all eyes, Anna, are on central banks maybe now admitting that over-tightening is a possibility. As Kaylee pointed out, Philip Lowe said that in Australia. Lael Brainerd now admits that, the vice chair of the Fed, and we'll be watching, of course, for the ECB today.
Yeah, and in the case of the ECB, a slightly different time horizon if we're thinking about peak rates, Matt. But the point is well made about what the global narrative tells us at this point. This is the European picture right now. Stocks kind of in limbo, waiting for that ECB. The same moves lower in commodity prices that Matt was talking about yesterday, boosting assets over in the United States. Risk assets there weighed on the London market yesterday. Today we rebound a little bit. Today up by 0.4%. Flat in Germany, up 0.3 on the CAC 40. Talking of being in limbo, we're kind of in limbo on the euro dollar this morning, waiting for that news from the ECB. Will it be 50? Will it be 75? Is that the key question? Or is the key question around the terminal rate? How high we get? How wide is the window? How long is the window for rates before we get to, dare we say it, a pivot point for the ECB and those energy headwinds really come home to roost? This is euro dollar then, all the nines as we head towards the ECB meeting later on today. 114.98. We saw the weakest level on the pound yesterday since 1985. We continue to test those lows, down by 0.3%. There is a lot of focus on the ECB on the monetary side. On the fiscal side, though, the UK in focus today as we wait for details in the next hour or two around the UK's policy to support households and businesses. Talking of one UK business underlining today the issues that these businesses face, AB Foods, the name is a little misleading. It owns food companies, but also Primark, which is a value retailer here in the UK, a sort of fast fashion retailer. They have been finally, and is this where it really starts for that end of the retail space? They've been finally giving a profit warning and talking about the headwinds they face, both in terms of the energy costs and the strength of the dollar. They have to go out into international markets to buy those products. The weak pound at 114.98, not doing them any favours. Darktrace, this is a cybersecurity business based in London, down by 31%. Thoma Bravo, a PE firm, private equity firm in the US, was going to make an offer for the company. That has been called off. They're not making that offer. The stock drops more than 30% then, Kaylee.
A massive, massive move. And Anna, I know that Matt was just pointing out how Wednesdays have been the exciting days of late, but I think this is going to be a pretty exciting Thursday because there is a lot going on today, including UK Prime Minister Liz Truss expected to announce a package of support to help ease the pain from rising energy bills. We're looking for that around 6:30 a.m. Eastern time. Could be a price tag of about £200 billion. The U.S. also will be hosting the first gathering of 13 Asian nations on an economic pact aimed to counter China's rising regional influence. More on that in just a second. We'll hear from Treasury Secretary Janet Yellen as well. She's traveling to Detroit today to deliver remarks on the economy, but really it's all going to be about central banks. We get the ECB decision, as Anna said, 8:15 a.m. Wall Street time, followed by Christine Lagarde's news conference, and then Fed Chair Jerome Powell will be delivering remarks at the Cato Institute, and regional Fed Presidents Charles Evans and Neil Kashkari also will have speaking engagements, so buckle up for a big central bank day, Matt.
Well, and then football, right?
And that, yes.
Yeah,
Thursday night football kicks off tonight. It's the most wonderful time of the year.
There you go. All right, let's get back to the central banks. We'll talk about football throughout the program, but Australia's central bank is taking an outlier stance on rate hikes. RBA Governor Philip Lowe signaled policymakers may soon abandon outsized hikes. Bloomberg's Danny Berger joins us for more. Danny?
Yeah, Matt, this certainly got the market excited early this morning, again, very early this morning, London time, that this represented a pivot point for global central banks that perhaps are not going to go at it as hard as they have. And now I kind of can't decide whether this is a market grasping at straws. We did see some of that global move unwind slightly, whether this is just really Australia specific. But look, the RBA Governor Lowe did say things that might chime with other policymakers, essentially saying that they need to wait to see how this transmits through, and a higher cash rate means they won't have to go at it as fast. And look, there's some evidence that Aussie 2-year yields, they have been the first to move. We've seen it this cycle that they moved higher before the U.S. did, for example. Adding to this argument, we had the Bank of Canada this week as well going 75, not going 75. I mean, they didn't go as big as many had thought that they would. So perhaps it's gathering evidence, but at the moment, look, they really are the outlier. We continue to hear from Fed chairs saying that, we are going to be committed to this job of bringing inflation down.
Okay, meanwhile, back to the Fed conversation then, Danny, and seeing if there is any read across. Fed Vice Chair Lael Brainard reiterated the Fed's commitment to driving down inflation, although she also talked about some of the things Matt was saying about the sort of two-sided risks. She spoke at a conference yesterday.
We're in this for as long as it takes to get inflation down. So far, we've expeditiously raised the policy rate to the peak of the previous cycle, and the policy rate will need to rise further.
So, Danny, how are banks and forecasters putting together the latest thoughts from these Fed officials and coming up with their forecasts?
Well, I think it's clear to anyone listening that the Fed's not going to back off. And in that line, we had Jan Hatzius saying that they've upgraded their forecast. They think the bank's going to go 75 this month, 50 the next month, potentially 25 in December. Now, I got to say, there's some element of Goldman playing catch up to the market. I have in front of me for our radio listeners the market pricing for all the different meetings. They're not too far off from 75, 50, and 25. But it is notable that we're hearing from Fed speakers saying this. We're about to enter a blackout period. We get Powell today. So it does feel like they're trying to prime the market, saying, listen, we're still doing these jumbo rate hikes. We still are not done bringing inflation down.
All right, a job ongoing. Bloomberg's Danny Berger, thank you so much. To another central bank now, the ECB is holding its first monetary policy meeting since July, when officials raised the key rate for the first time since 2011. The central bank is on the brink of a jumbo 75 basis point hike in rates to wrestle back control over record inflation, even as the risk of a Eurozone recession rises. Bloomberg's Europe correspondent Maria Tadeo is in Frankfurt and is joining us now. Maria, who would have thought we'd be talking about an ECB potentially moving 75 today?
Well, Kaylee, they have to. I mean, that is the only way to go about this. The only way is up for the European Central Bank. This is a single mandate central bank. It's about price stability, close but below 2%. And if you take a look at around the inflation picture in the euro area, in some countries it now more than triples that goal. So they have to hike. There's no question about it. The only debate, if anything, the real tension going into this meeting is, will it be 75 or can it be 50 basis points? Now, when you look at the 75 basis point camp, what they say is, the reality is there's a window, and when that window opens, you have to take decisive action. This is also about the credibility of the institution. You have to hike 75 basis points today. The 50 basis points, this is a minority, but they do make a fair argument, which is you could be hiking aggressively by European Central Bank standards at a time in which, of course, the European economy risks a recession and a full-blown energy crisis.
Yeah, and talking about those risks of recession, the energy crisis is a real wild card, a real unknown for all European policymakers. The flow of gas, the weather, just how cold it gets over the winter, all these things that the ECB has to factor in.
Yeah, and Anna, this is on everyone's minds, be it here at the Central Bank in Frankfurt, back in Brussels with the European Commission. This is the one externality that they cannot control, but they can prep for it. And Anna, tomorrow, to me, the choreography that we go from the ECB in Frankfurt to Brussels with that very important energy minister meeting that is scheduled to take place tomorrow, does tell you that the story now, the geopolitics, the economy, inflation, it really has become a single story. I would point to the words of the head of the Commission, Ursula von der Leyen. Yesterday, she was defiant, saying Europe is not going to fold into the blackmail of Russia. The goal is to cut down revenues from energy and also stabilize prices for European consumers. The question is how. Hopefully tomorrow we get some clarity on that front.
All right. Thanks very much, Maria Tadeo, there in Frankfurt reporting on the ECB. Stay tuned for our ECB coverage all day long. Christine Lagarde's news conference today starts, the coverage starts at 8:15 New York time, 1:15 in London. We'll be on it, as I said, all day long. The U.S., meanwhile, will host its first gathering of Asian nations on an economic pact aimed to counter China's rising regional influence. That event kicks off today in Los Angeles with 13 countries attending. This comes as President Biden is holding back on a decision to scrap any Trump-era tariffs on China imports. Earlier this summer, the president had signed off on a new exclusion process for exemptions from tariffs on manufacturing materials imported from China. Jack Fitzpatrick, Bloomberg government reporter, joins us now from Washington, D.C. for more. So, Jack, what do we know?
At this point, we know there's not going to be a decision now on the possibility of reducing Trump-era tariffs. What we also know as far as the timeline is there are a couple things to look for. One, there's an October Chinese Leadership Congress meeting that plays into that decision. And of course, the U.S. November midterms are a major point because any decision to reduce these tariffs on China could look weak between President Biden and his relationship with Xi Jinping, and that there's a lot of willingness in Congress to push the president toward, if not a hawkish stance on China, at least sort of the appearance of being tough on China. So over the next few months, it would be very difficult politically for the Biden administration to make a final decision. And yes, as you mentioned, the Office of the Trade Representative has started a process that would at least allow businesses to point out tariffs that they think would be particularly harmful to job creation or anything along those lines in the U.S. But for now, there's not going to be a decision, as there are a few major political points over the next couple months that would make that difficult.
And another angle, Jack, on the relationship between the U.S. and China. The U.S. National Security Advisor Jake Sullivan is warning about a potential Chinese invasion of Taiwan, or at least acknowledging that is a possibility the White House considers. He's insisting the White House's position over the island's status has not changed, despite China claiming to the contrary. Let's listen to what he said, because he spoke to Bloomberg for the David Rubenstein Show Peer-to-Peer Conversations.
I think it remains a distinct threat that there could be a military contingency around Taiwan, and the People's Republic of China has actually stated as official policy that it is not taking the invasion of Taiwan off the table.
Jake Sullivan there setting out the U.S. position. So the U.S. very firm that in their view, their position over Taiwan has not changed.
Yes, the Biden administration argument is the position has not actually changed. A lot of this debate, the back and forth between the Biden administration and China is not necessarily over whether there has been a qualitative change in policy, but sort of how much focus there has been on Taiwan. Keep in mind the high-profile lawmaker visits to Taiwan, including by the House Speaker Nancy Pelosi. That's not a change in policy. Those lawmaker visits happen. But there have been now 3 this year. There's another group that just went yesterday to Taiwan. And of course, there is a bill that the Biden administration has pushed back on, at least in terms of timing. And Jake Sullivan did mention they have some issues with the bill that would formally recognize Taiwan as a non-NATO ally. That would not actually specifically change the U.S.'s stance toward Taiwan. But you have a number of things in the news in terms of lawmaker visits, a bill to more formally recognize the existing relationship between the U.S. and Taiwan, and just a ratcheting up of pressure without necessarily changing the policy, but I guess a harsher spotlight on the existing policies and the existing points of tension between the U.S. and China.
All right, Jack Fitzpatrick of Bloomberg Government, thank you so much. And you can watch that full interview with U.S. National Security Advisor Jake Sullivan on the David Rubenstein Show Peer-to-Peer Conversations on September 21st at 9 p.m. in New York. Turning to corporate news, there was just one major surprise at Apple's latest product unveiling. In one of the worst years of inflation in decades, the company is not raising prices. Apple introduced the iPhone 14, new AirPods Pro, earbuds, and a new Apple Watch. The iPhone retains the general look of the older version while getting camera enhancements and a satellite messaging feature, though I personally am pretty attached to my green iPhone, and I was disappointed to find that that is no longer going to be an option with these iPhone 14s. As for how all of that is translating into Apple shares this morning, very little changed in early hours, not even up 0.1%. It is a larger move, though, in the pre-market for Asana, the software company. It reported results after the bell yesterday, raised its revenue guidance. Analysts really positive on that. Plus, the CEO is buying up shares, and as a result, the shares are higher by about 19% this morning. Also higher this morning is GameStop. And no, this is not just another meme-related move. This actually is somewhat fundamental because it too reported earnings after the bell yesterday, or I shouldn't say earnings because actually it's still losing money and its revenue disappointed, net sales disappointed. Where the optimism is coming from is a partnership it announced with cryptocurrency exchange FTX. That in theory may help their pivot toward non-fungible tokens. So as a result, that stock up about 9% in early hours, Anna.
So it does feel like it's still about the meme stocks and not about the earnings, but we take the point, Kaylee. Let's tell you what's coming up on the program a little bit later. We'll talk to Antoine Bouvet, ING senior rate strategist. What is he expecting? What is important to listen out for from this ECB meeting today? And the messaging, the balance between rate hikes, laser focus on inflation, but also growth threats. And also coming up, Thursday Night Football is heading to Amazon. It's a $13 billion test of whether streaming is ready for America's most popular sport. Read more of today's big take story at Bloomberg.com or on the Bloomberg terminal, of course. And be sure to catch our new show, Kaylee's new show, in fact, The Lineup, all about sports betting. It premieres tomorrow at 7 p.m. New York time. This is Bloomberg.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. And I'm really focused lately on the situation in Great Britain because of the huge drop in the pound. We saw it fall yesterday to the lowest level since 1985. John Mayer was only 6. And then funding costs continue to surge. This is the 2-year over 2-year, but by any measure, it's very expensive and getting more expensive to fund your business, which is concerning when your currency value continues to plummet. Dana El-Baltaji joins us, Bloomberg managing editor for credit, to talk about what this means for the UK economy and what it means for corporate credit. Dana?
Hi, good morning. You know what? You're absolutely right. The sort of pain that we're seeing in markets is quite significant. See, the thing is that with this massive package, we don't know how it's going to be funded. And if it's going to be funded through bonds, then obviously there's going to be a massive supply issue. And if you have that, then the natural reaction is that yields will go up. At the same time, because of this package, basically inflation will not be as high as people thought it was going to be, and that's why there's a massive repricing for the pound. It's a double whammy, and it's extremely painful.
Repricing for the pound and the short end of gilt curves. Then, Dana, thank you very much for your thoughts. Bloomberg's Dana El-Baltaji joining us with the latest on the UK market. More on that to come. For more market analysis, check out MLIV Go. That's the Market Live blog on the Bloomberg terminal. This is Bloomberg.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders.
Watch Wednesdays on Bloomberg Television.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
less than 3 hours to go until an ECB rate decision that could see a 75 basis point rate hike from Christine Lagarde and co. Ahead of that decision, we have a 10-year German bund yield around 160, a euro at parity with the dollar. What will it all ultimately mean for these markets, especially if it is a jumbo move? Antoine Bouvet, ING senior rate strategist, will join us next to discuss. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
Top end venture is sort of 3x net of fees. You ideally you're hoping for more than that. You're hoping for 5x or more. You're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Marc Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Investors watching the Fed's next move will focus on a speech today by Chair Jerome Powell. Meanwhile, Australia goes against the grain. Its central bank chief signals a potential end to outsized interest rate hikes. The European Central Bank is on the verge of a jumbo rate increase. A survey indicates the ECB will raise rates today by 0.75 of a percentage point. And President Biden puts off a decision on whether to scrap Trump-era tariffs on China. The administration is looking at ways to help businesses seeking relief. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Matt, European equity markets, we had a sort of mixed bag yesterday, whilst the US had a really strong session. So we played a little bit of catch up, but now kind of in limbo as we wait for the ECB.
Yeah, we were up big yesterday here after Lael Brainerd suggested there could be risks to over tightening, and after oil fell, we had an 81 handle on one point on Text Intermediate. We're now coming back down a little bit in terms of futures. Not much, only about 0.1%, a little less than that. Nonetheless, the direction looks like it's changing ahead of, 4 hours? 4 hours.
Yes.
4 hours until the market opened. Bloomberg U.S. dollar index is rising, on the rise again, although not as high as we saw it yesterday. Still, the strong dollar has been a tailwind for, a headwind for other countries' economies. And one of the things I think that's pushing central banks to act maybe a little bit more, the ECB may be hiking 75 basis points today. NYMEX crude, still with an 81 handle. It's coming back down now, about 0.75%. This is really interesting because we even got a production decrease from OPEC Plus, but with the lockdowns in China, you can understand that demand is less by about 27 million people. Bitcoin falling about 1%, 19,220, but still hovering around that $20,000 level. Kaylee, what do you see in terms of pre-market movers?
That's what I'm here for, Matt. Deliver the pre-market movers and help you tell time. So in terms of pre-market movers, GameStop is what I want to start with because, of course, this stock often moves with nothing related to fundamentals, but we actually got some news yesterday. The company delivering results, I say results after the bell because it's still losing money and net sales disappointed. But where the optimism is coming in this morning is the fact that they announced a partnership with FTX, the crypto exchange. Maybe that helps with that shift to NFTs. So that stock is up the better part of 10% before the bell. And a number of stocks are moving related to analyst action as well. Deutsche Bank upgrading Moderna to a buy in part due to strong earnings results. So that stock is up about 2.2%. Stifel initiating a buy rating at AMD, citing an executing on the product roadmap going pretty well. So that stock is up about 0.5%. And then First Solar upgraded to a buy at Goldman, a 172 price target, which would be about 28% upside to where the stock closed yesterday. It's up about 4% in early hours this morning, trading right now at 140, Anna.
Kaylee, we did have small gains on European stocks earlier. We just dropped to unchanged on European stocks. There's a lot to wait for, though. Details on the fiscal stimulus in the UK, details from the ECB on their thinking, the communication and how it falls down between those two stools of fighting inflation, of course, but being mindful of the risks to growth in the future. This is what limbo looks like on the pound as we wait for further details of fiscal policy. 114.82, that low that we haven't seen since 1985 being touched in yesterday's session. This is ABF, the Associated British Foods business, which owns the fast fashion chain Primark, and they had a profit warning this morning, announced a profit warning, and really it's a sort of classic twin worries for UK business right now. On the one hand, the higher cost of energy. On the other hand, the strength of the dollar, the weakness of the pound means going out into those international markets to buy those clothes is more expensive. Darktrace is a cybersecurity business, of course, Matt, here in London, and it is down by 34% or so today because the private equity business Thoma Bravo, based in the US, was going to buy the company. Those talks, though, have now been called off.
All right, so we'll continue to follow those stories. Now let's bring in Antoine Bouvet right now, ING senior rate strategist, because there's so much going on in the world of central banks. Antoine, it looks like we didn't have a pivot from Lael Brainard. She still said they're going to do whatever it takes. Rates are going to have to be higher for longer, but she did acknowledge that there are two-sided risks to continued tightening. And then Philip Lowe at the RBA said something similar. You've heard this kind of dovishness from Philip Lane. Are central banks starting to kind of chill?
No, especially when it comes to the Fed. It's clearly a minority view. I think that it's a good time now to highlight the risk of over-tightening. This is going to be a conversation that they're going to have at the end of the year. But as we've seen in Jackson Hole, the message is very clear. The market should not be focused on the next stage after tightening. When it comes to the ECB, it's very different. I think we have two camps, and we still have a pretty strong dovish camp that came out earlier this week with various interviews in the magazine. And clearly, these people don't want to hike 75 basis points. They want to be more gradual. They want to be paying more attention to that trade-off between growth and inflation. And this is going to be very interesting what makes it to official ECB communication today.
Good morning to you, Antoine. It'll be interesting to see then. I mean, if we just got 50, quote unquote, just got 50 from the ECB, would that be seen as dovish? When you compare it to the big jumbo hikes we've seen from the Fed and the like, would it signal that the ECB is not quite as focused on inflation?
Yes, absolutely. 50 basis points would be seen as a dovish move, and I think the market will be extrapolating to the next meetings, thinking that when bad economic news come and bad economic data arrive, then the ECB will flinch and not hike as much as the market is pricing. So yes, it will be very important.
And what kind of acknowledgement of the risks do you think we should get from the ECB? You know, they'll want to, just like the Fed, they might want to give these hawkish messages about how much they want to fight inflation, but at the same time, everybody knows that the risks to the downside for the Eurozone economy are so intense. So what kind of messaging do you think they'll be delivering?
Yeah, that's the difference between should and will. I don't think they will be acknowledging much this. I think the Fed's strategy to be very much focused on inflation and ignoring these economic downside risks has paid off for them. And I think a lot of the hawks on the Governing Council, and perhaps even a majority, think that this is the right strategy. So if you look at the economic forecast back in June, they were extremely optimistic. They're probably going to be too optimistic this time around again. And in a way, the market will interpret that as saying the path is clear for more aggressive hikes.
Antoine, we are all so focused on the hikes for all of these central banks, what size they will be, how high they ultimately go. We also just don't really talk as much about the balance sheet. When are we going to be having a more substantial conversation about QT in Europe?
This is really the potential curveball for today. I mean, I don't think they'll talk about this today. It's too dangerous. But the hawks want to talk about this by the end of the year. There's a lot of things that can happen on the balance sheet front. They can start discussions about QT. They can talk about their reinvestment policy, extending that from one bond program to the other to manage spreads. They could signal to us that they are closer to activating the TPI if they hike more aggressively. So there's a whole range of things that can happen, and the risks are quite two-sided. Ultimately, if they make a mistake, DCB will have to pick up the pieces because they already dipped their toe back in the bond market, and they already said that it's their job to prevent an acceleration of the widening in sovereign spreads.
All right, well, we may or may not get some insight into that then in about 3 hours' time, Antoine. Before we get there, we also expect to hear from UK new Prime Minister Liz Truss outlining her plans for energy support for consumers and energy companies. How do you price fiscal policy in the UK to the tune of perhaps £200 billion and what that ultimately is going to mean for gilts?
It's very difficult. So I try to break it in two main impacts. One is the economic impact and how it's going to protect the economy from certain growth downside and potentially also make it, make inflation, slow down the inflation downside that we have. That's one aspect. And that I think is already priced because we kind of know the size of it and the definition of the energy cap. What we don't know is how it's going to be financed. And this is very important for the gilt market. Unlike the pandemic in 2020, 2021, the Bank of England is not buying bonds anymore. They're releasing them in the market through quantitative tightening, and they will be selling them in September. So if you add up quantitative tightening, if you add up the existing deficit, the new deficit on the energy cap, plus potential tax cuts, that's a lot of money that private investors are going to have to put into the gilt market. Probably around 120 billion this year, around 210 billion next year. So that's unprecedented amount. And the question is, who will buy them? One of the answers historically has been foreign buyers, but with sterling weakening a lot, you can reasonably wonder whether these investors want to take that FX risk.
Okay, yeah, so will that gilt supply test the kindness of those strangers? Antoine, thanks very much for joining us. Antoine Bouvet of ING. We'll stick with that story next. We'll talk about what's going on in the UK. We'll discuss soaring energy prices with Johnny Marshall, senior economist at the Resolution Foundation, a think tank that focuses on improving living standards here in the UK. We'll discuss what we expect from today's fiscal boost. This is Bloomberg.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and the electricity we need, we want to do 100% clean